trade also. Interesting, the VIX is also on the downside, and that also pretty much very strong. BankX also, the story remains the same. All of the headline banks are doing really well, especially HDFC Bank. That's where the key contribution is happening. If you could just show the important stocks, but long build up, significant amount of that movement is happening. And let's see which are the stocks which should be in focus. GMR Airports and Interglobe Aviation. Interesting aero theme. All of these stocks doing well in trade. Short covering candidates include Samman Capital. Expectations of important development here. Tube Investments, that's up almost 5% as well. It was the key gainer also at 10:45 show. Long unwinding largely is going to be not that convincing, but yes, that's Power Grid and Coal India for you. And short build-up, I doubt there will be any stocks in this. Is there any short build-up? No, it's not there. So you can see the entire market is skewed towards, importantly, long build-up and short covering. So this is the entire buzz on the FNO space.
Right, got that view. Well, thank you so much, Sharath, for all the details. Moving on, next stock which is in focus is GOCL Corporation. Let's pull up that stock. The stock is up almost 19% in trade. Now, there's a reason why the stock is up, as they've approved early monetization of one of their land parcel in Bangalore. And this is 38 acres land with Hinduja Realty Ventures Limited, and the project currently is under de-notification from SEZ status. Now, talking about the transaction structure, sale of entire land and building will be to a leading industrial house. The transaction is expected to be completed in tranches, and the total deal values stand at around 2,261 crores. Well, the company's entitlement is at 815 crores post completion, and the transaction is expected to close within 6 months. Timeline, of course, is extendable by mutual consent. But overall, because of the land monetization, early land monetization, this is the reason why the stock is buzzing. Mr. Solanki, coming to you on this, what's your view when it comes to GOCL Corporation, and what should investors do, taking into consideration the valuation as well?
I think again we do not have any active recommendation on the stock, but with this monetization, I think it would be a huge value unlocking for the company and for the shareholders, because if you see the overall size of the company, so this 800 odd crores is almost like 45 to 50% kind of its market cap. So I think it's a very huge unlocking opportunity for the shareholders at the moment.
Right. Nitco is yet another counter which has been buzzing in trade, and this is after the company reported that they have issued few shares or warrants actually to their promoters. What could be the potential reason? Is that a significant positive? Let's try and understand that with Parth.
Thanks, Amit. So, Nitco's board has approved the allotment of 1.14 crore shares to its promoter in CMD, Mr. Vivek Talwar. This is upon the conversion of share warrants that were issued at a price of 92.25 rupees per share, which is actually at a 12% premium to the current market price. Apart from this, over 1.2 crore warrants are still pending for conversion. So the total fund infusion from the conversion of these warrants will be around 78.87 crores, as the company will receive the balance 75% payment from these warrants. After conversion of this, the promoter's stake in the company is expected to rise to 8.82%. Regarding stock performance, yes, Nitco has gained in trade today and is up more than 8%. But if we switch towards the longer time frame, then in the last 6 months, the shares have fallen almost 30%, and on a year-to-date basis, the company is down around 20%.
Right. Thank you, Parth, for that detail. Narendra, any view on Nitco? This promoter issuance of shares to promoters and promoter holding going up. Do you see that sentimentally positive coming in for the counter?
Yeah, again, no view on the individual stock, but yeah, definitely this increases the confidence of the investor, and also we are positive, constructively positive on the sector, as we see the overall various companies in the sector are trading at decent valuations, and with the gradual recovery in the demand, both in rural as well as urban centers, I think the building material sector should show gradual improvement in the performance. And I think from valuation perspective also, these are the attractive valuation. Hence, the overall sentiments, it's a sentiment booster for the company.
Right. Precision camshafts is the other counter which is in focus. The stock is up 14% in trade. Well, it is buzzing on the back of volumes. Volumes are up at 3x. But, let's bring in Puneet for more details and, of course, what are the key growth triggers for this company. Puneet, over to you.
Well, thank you for that. It's definitely buzzing on the back of 3x volumes of 30. The average stocks are 15% as well. And this is the first sign of stock performance being so strong after almost a 28% decline from the start of the year. So when you look at the company, one of the largest manufacturers of camshafts in India, as well as has a meaningful share globally as well. Now, specifically, it's only among the few global players who makes these camshafts across the 4 stages as well, on all 4 types essentially. So there is that moat of engineering. 8 plants currently all located in Solapur, but also it is developing a new 25-acre greenfield facility as well, which will be operationalized as well very, very soon. Apart from that, almost 52% of the company's revenue comes from the export market. So definitely the easing out of the Iran-Israel war at this point of time will be a benefit as well. But in terms of market share, almost 70% market share for the company in the passenger vehicle space, specifically for camshafts in India. They've also mentioned that while they have key customers like Ford, GM, Toyota, as well as Maruti Suzuki and Hyundai, not any one particular customer has more than 17 to 18% share in terms of revenue. So that is diversified. What's also interesting is recent order wins from these clients have helped give volume visibility for FY26, but EV segment that's done to one of its subsidiaries is only 10 to 15% of its revenue. So the slower transition towards EV is actually a big benefit to Precision Camshaft, and you have to watch out for higher realization products of almost 30 to 35% for the integrated camshafts. That will be the next big trigger for the company.
Right, got that view. Well, Mr. Solanki, coming to you on this, what's your view when it comes to precision camshafts? And of course, if you have some, other picks in the auto ancillary space.
Yeah, again, no active recommendation on the stock, but we are very bullish on the auto ancillaries and auto sectors specifically. Now, coming to the performance of the company has been seeing sluggish demand from the ICE portfolio of its products. However, recently, the company has shifted towards electric vehicle mobility solutions, wherein the company tries increasing its share in electric vehicle component industry. However, it remains to be seen how the performance begins from there. Now, coming to the another auto ancillaries ideas, I think Uno Minda is one of the companies which we like right now. Plus, ZF commercial vehicles is also another company which we like in the ancillary space.
Right, got that view. Well, Virtuoso Opto is one such stock which is again in focus. It's an EMS player. If you see the volumes are up 2 times, and the stock is up 12% in trade today, which is down 36% in 2026. But to give more details about that and what lies ahead and what are the growth triggers when it comes to the overall EMS industry, we have Puneet still with us. Puneet, over to you.
Well, thank you for that. It's definitely one of the other makers where the returns have been quite subdued in this year, and hence, again, a first such moves given for this EMS counter. Now, as you rightly highlighted, it has been tough in terms of stock performance, but they have been diversifying, actually moving away from the hero product, which is ACs as well. So the company largely getting into original design manufacturing, or ODM, which is a higher margin product. Now, we speak about ODM for clients like Dixon Tech, mainly where they get that benefit in terms of margin. So they are, Virtuoso is moving towards that way as well. Now, across, of course, they are mentioned across 4 key segments, but ACs continue to be the lion's share of the revenue at almost 75%. In terms of outlook, that is more important for the company at this point of time. They have mentioned specifically that the expansion in the EPS will be led through its diversification as well as backward integration into plastics, as well as this will be largely completed by H1 of FY27. So you could see some margin improvements going forward after that. Launched their own ODM range, as I mentioned, in AC specifically, as well as the share of ODM is expected to increase hopefully by Q1 of FY27 and then moving forward as well. Finally, in terms of compressors, that has been the other backward integration product. almost achieved utilization of 50% already. And specifically for EMS, they have specifically mentioned that capacity will also increase by Q1 of FY27. So a lot more to watch out for this counter over the next couple of quarters. Continue to have it on your radar.
Right. Thank you so much, Puneet, for all the details. Well, Mr. Solanki, coming to you on this, do you track this counter? And if not, what are the other key EMS players do you think have good growth prospects?
Yeah, we favor Dixa, Number Enterprises, PG, Electroplast kind of stocks in this space, and do not have any active recommendation on this particular stock right now. But overall, I think the space is very interesting, and there's a good growth runway in the near term because of the crude oil prices. There may be some intermittent volatility due to the demand scenario. But I think from medium to long term, 3-year perspective, the space is very interesting, and the investors can make the money in that period.
Thank you, Narendra. Thank you for joining us and giving us your perspectives on the stocks that we discussed. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me, as always, is Mahima Vajrajani. And over the next half an hour or so, we'll try and solve all those queries. We are currently on standby, and let's cut into PM Modi speaking at the Rajya Sabha as we speak.
हम सभी परिचित हैं। मैं आज संसद के उच्च सदन के सामने और देशवासियों के सामने इन विकट परिस्थितियों पर सरकार का पक्ष साझा करने के लिए उपस्थित हुआ हूं। पश्चिम एशिया में चल रहे इस युद्ध को 3 सप्ताह से अधिक का समय हो चुका है। इस युद्ध ने पूरे विश्व में गंभीर ऊर्जा संकट पैदा कर दिया है। भारत के लिए भी ये स्थिति चिंताजनक है। इस युद्ध से हमारे व्यापार के रास्ते प्रभावित हो रहे हैं। इससे पेट्रोल, डीजल, गैस और फर्टिलाइजर जैसे जरूरी सामान की रूटीन सप्लाई प्रभावित हो रही है। गल्फ देशों में करीब 1 करोड़ भारतीय रहते हैं, वहां काम करते हैं। उनके जीवन और आजीविका की सुरक्षा भी भारत के लिए बहुत बड़ी चिंता है। हॉर्मुज़ स्ट्रेट में दुनिया के अनेक जहाज फंसे हैं। उनमें बहुत बड़ी संख्या में भारतीय क्रू मेंबर्स हैं। ये भी भारत के लिए एक बड़ी चिंता का विषय है। ऐसी विकट परिस्थिति में आवश्यक है कि भारत की संसद के इस उच्च सदन से शांति और संवाद की एकजुट आवाज पूरे विश्व में जाए। सभापति जी, युद्ध की शुरुआत के बाद से मैंने पश्चिम एशिया के ज्यादातर देशों के राष्ट्राध्यक्षों के साथ 2 राउंड फोन पर बात की है। हम गल्फ के सभी देशों के साथ लगातार संपर्क में हैं। हम ईरान, इजराइल और अमेरिका के साथ भी संपर्क में हैं। हमारा लक्ष्य डायलॉग और डिप्लोमेसी के माध्यम से क्षेत्र में शांति की बहाली का है। हमने डी एस्केलेशन और हॉर्मुज़ स्ट्रेट खोले जाने पर भी उनसे बात की है। कमर्शियल जहाजों पर हमला और हॉर्मुज़ स्ट्रेट जैसे अंतर्राष्ट्रीय जलमार्ग में रुकावट अस्वीकार्य है। भारत ने नागरिकों पर, सिविल इंफ्रास्ट्रक्चर पर, एनर्जी और ट्रांसपोर्ट से जुड़े इंफ्रास्ट्रक्चर पर हमलों का विरोध किया है। भारत डिप्लोमेसी के जरिए युद्ध के इस माहौल में भी भारतीय जहाजों के सुरक्षित आवागमन के लिए सतत प्रयास कर रहा है। भारत ने इस समस्या के समाधान के लिए संवाद का ही रास्ता सुझाया है। इस युद्ध में किसी के भी जीवन पर संकट मानवता के हित में नहीं है। इसलिए भारत का सतत प्रयास सभी पक्षों को जल्द से जल्द शांतिपूर्ण समाधान के लिए प्रोत्साहित करने का है। सभापति जी, संकट की स्थिति में देश विदेश में भारतीयों की सुरक्षा हमारी बहुत बड़ी प्राथमिकता है। युद्ध शुरू होने के बाद से लेकर अब तक 3,75,000 से अधिक भारतीय सुरक्षित भारत लौट चुके हैं। ईरान से ही अभी तक 1000 से अधिक भारतीय सुरक्षित वापस लौटे हैं। इनमें 700 से अधिक मेडिकल की पढ़ाई करने वाले युवा हैं। हमारी सरकार संकट के इस समय में पूरी संवेदनशीलता से काम कर रही है। सभी देशों ने वहां मौजूद भारतीयों की सुरक्षा का पूरा आश्वासन दिया है। हालांकि ये बहुत दुखद है कि हमलों के कारण कुछ भारतीयों की मृत्यु हुई है और कुछ घायल भी हुए हैं। ऐसे मुश्किल हालात में परिवारजनों को आवश्यक मदद दी जा रही है। जो घायल हैं, उनका बेहतर इलाज सुनिश्चित कराया जा रहा है। सभापति जी, हॉर्मुज़ स्ट्रेट विश्व व्यापार के सबसे बड़े रूट्स में से एक है। विशेष तौर पर कच्चे तेल, गैस और फर्टिलाइजर से जुड़ा परिवहन इस क्षेत्र से बहुत बड़ी मात्रा में होता है। युद्ध के बाद से ही हॉर्मुज़ स्ट्रेट में जहाजों का आना जाना बहुत चुनौतीपूर्ण हो गया है। लेकिन विपरीत परिस्थितियों के बावजूद हमारी सरकार ने संवाद से, कूटनीति के माध्यम से रास्ते बनाने का प्रयास किया है। प्रयास ये है कि जहां से भी संभव हो वहां से तेल और गैस की सप्लाई भारत पहुंचे। ऐसी हर कोशिश के नतीजे भी देश देख रहा है। बीते कुछ दिनों में दुनिया के अनेक देशों से कच्चा तेल और एलपीजी से भरे जहाज भारत आए हैं। इस दिशा में हमारे प्रयास आने वाले दिनों में भी जारी रहेंगे। सभापति जी, भारत का प्रयास है कि तेल हो, गैस हो, फर्टिलाइजर हो, ऐसे हर जरूरी सामान से जुड़े जहाज भारत तक सुरक्षित पहुंचे। लेकिन इस युद्ध से बनी वैश्विक परिस्थितियां अगर लंबे समय तक बनी रहती है तो गंभीर दुष्परिणाम तय है। इसलिए भारत ने अपनी रेजिलियंस बढ़ाने के लिए जो भी प्रयास बीते वर्षों में किए हैं, उनको और गति दे रहा है। सभापति जी, कोई भी संकट हो, वो हमारे हौसलों और हमारे प्रयास दोनों की परीक्षा लेता है। देश ऐसे संकटों का बेहतर तरीके से सामना कर सके, इसके लिए बीते 11 वर्षों में निरंतर निर्णय लिए गए हैं। एनर्जी इंपोर्ट का डाइवर्सिफिकेशन ऐसे ही प्रयासों का हिस्सा है। पहले क्रूड ऑयल, एलएनजी, एलपीजी ऐसी एनर्जी जरूरतों के लिए 27 देशों से इंपोर्ट किया जाता था। वहीं आज भारत 41 देशों से एनर्जी इंपोर्ट करता है। बीते दशक में भारत ने संकट के ऐसे ही समय के लिए कच्चे तेल के भंडारण को भी प्राथमिकता दी है। हमारी तेल कंपनियां संकट के समय के लिए काफी मात्रा में पेट्रोल और डीजल का भंडार रखती हैं। बीते 11 वर्षों में 53 लाख मीट्रिक टन से अधिक का स्ट्रेटेजिक पेट्रोलियम रिजर्व भी डेवलप किया गया है और 65 लाख मीट्रिक टन से अधिक के रिजर्व की व्यवस्था पर देश काम कर रहा है। साथ ही बीते दशक में भारत की रिफाइनिंग कैपेसिटी भी अच्छी खासी बढ़ाई गई है। मैं आपके माध्यम से सदन को और देश को ये आश्वासन देना चाहता हूं कि भारत के पास क्रूड ऑयल के पर्याप्त स्टोरेज के और निरंतर सप्लाई की व्यवस्थाएं हैं। सभापति जी, हमारी सरकार की कोशिश है कि ईंधन के किसी एक ही स्रोत पर ज्यादा निर्भरता न रहे। सरकार घरेलू गैस सप्लाई में एलपीजी के अलावा पीएनजी पर भी बल दे रही है। बीते दशक में देश में पीएनजी कनेक्शन पर अभूतपूर्व काम हुआ है। बीते दिनों में इस काम को और तेज किया गया है। साथ ही एलपीजी के घरेलू उत्पादन को भी बड़े पैमाने पर बढ़ाने का प्रयास किया जा रहा है। सभापति जी, बीते वर्षों में सरकार का निरंतर प्रयास रहा है कि हर सेक्टर में दूसरे देशों पर निर्भरता कम से कम हो, हम ज्यादा से ज्यादा आत्मनिर्भर हो, यही एकमात्र विकल्प है। जैसे भारत का 90% से अधिक ट्रेड विदेशी जहाजों पर होता है, ये स्थिति किसी भी वैश्विक संकट में भारत की स्थिति को और भी गंभीर बना देती है। इसलिए सरकार ने मेड इन इंडिया जहाज बनाने के लिए करीब 70,000 करोड़ रुपए का अभियान शुरू किया। भारत आज शिप बिल्डिंग, शिप ब्रेकिंग, मेंटेनेंस एंड ओवरहॉलिंग ऐसी हर सुविधा के निर्माण पर तेज गति से काम कर रहा है। भारत अपने डिफेंस सेक्टर को भी अधिक रेजिलिएंट बना रहा है। बीते दशक में किए गए प्रयासों से भारत आज अपनी जरूरत के अधिकांश हथियार भारत में ही बना रहा है। एक समय था जब भारत अपने जीवन रक्षक दवाओं के कच्चे माल यानी एपीआई के लिए भी दूसरे देशों पर बहुत अधिक निर्भर था। बीते वर्षों में देश ने भारत में ही एपीआई इकोसिस्टम बनाने के लिए अनेक प्रयास किए हैं। इसी प्रकार रेयर अर्थ मिनरल्स में विदेशी निर्भरता को कम करने के लिए भी बड़े कदम उठाए जा रहे हैं। आदरणीय सभापति जी, वर्तमान संकट ने पूरी दुनिया की इकोनॉमी को हिला दिया है। अभी तक पश्चिम एशिया में जो नुकसान हुआ है उससे रिकवर होने में भी दुनिया को बहुत समय लगेगा। भारत पर इसका कम से कम दुष्प्रभाव हो, इसके लिए निरंतर प्रयास किए जा रहे हैं। हमारी इकोनॉमी के फंडामेंटल्स मजबूत हैं और सरकार पल पल बदलते हालात पर नजर रखे हुए है। सरकार इसके शॉर्ट टर्म, मीडियम टर्म और लॉन्ग टर्म ऐसे हर प्रभाव के लिए एक रणनीति के साथ काम कर रही है। भारत सरकार ने एक इंटर मिनिस्ट्रियल ग्रुप भी बनाया है। ये ग्रुप नियमित मिलता है और हमारे इंपोर्ट एक्सपोर्ट में आने वाली हर दिक्कत का आकलन करता है और ये ग्रुप आवश्यक समाधान पर भी निरंतर काम करता रहा है। जैसे कोरोना के समय में अलग अलग सेक्टर्स की चुनौतियों से निपटने के लिए एक्सपर्ट्स और ऑफिसर्स के एम्पावर्ड ग्रुप्स बने थे, वैसे ही कल ही ऐसे 7 नए एम्पावर्ड ग्रुप्स का भी गठन किया गया है। ये ग्रुप सप्लाई चेन, पेट्रोल डीजल, फर्टिलाइजर, गैस, महंगाई ऐसे विषयों पर त्वरित और दूरगामी रणनीति के तहत कार्रवाई करने का काम करेंगे। मुझे पूरा भरोसा है कि साझा प्रयासों से हम परिस्थितियों का बेहतर सामना कर पाएंगे। आदरणीय सभापति जी, सरकार ये भी प्रयास कर रही है कि आने वाले बुआई के सीजन में किसानों को पर्याप्त खाद मिलती रहे। सरकार ने खाद की पर्याप्त सप्लाई के लिए आवश्यक तैयारियां की हैं। सरकार का निरंतर प्रयास है कि किसानों पर किसी भी संकट का बोझ न पड़े। मैं देश के किसानों को फिर आश्वस्त करूंगा कि सरकार हर चुनौती के समाधान के लिए उनके साथ खड़ी है। आदरणीय सभापति जी, ये राज्यों का सदन है। आने वाले समय में ये संकट हमारे देश की बड़ी परीक्षा लेने वाला है और इस परीक्षा में सफलता के लिए राज्यों का सहयोग बहुत आवश्यक है। इसलिए इस सदन के माध्यम से मैं देश के सभी राज्यों की सरकारों से भी कुछ आग्रह करना चाहता हूं। संकट के समय गरीबों पर, श्रमिकों पर, प्रवासी साथियों पर बहुत बुरा असर पड़ता है। इसलिए पीएम गरीब कल्याण अन्न योजना का लाभ समय पर मिलता रहे, ये सुनिश्चित करना होगा। जहां प्रवासी श्रमिक साथी काम करते हैं, उनकी परेशानियों को दूर करने के लिए प्रोएक्टिव कदम उठाए जाएं। ऐसी स्थितियों पर नजर रखने के लिए राज्य सरकारें विशेष व्यवस्थाएं करें तो इससे काफी सुविधा होगी। राज्य सरकारों को एक और चुनौती पर भी बहुत अधिक ध्यान देना होगा। ऐसे समय में कालाबाजारी करने वाले, जमाखोरी करने वाले बहुत एक्टिव हो जाते हैं। जहां से भी ऐसी शिकायतें आती हैं, वहां त्वरित कार्रवाई होनी चाहिए। जरूरी चीजों की सप्लाई निर्बाध चलती रहे, ये सुनिश्चित करना हर राज्य की प्राथमिकता होनी चाहिए। आदरणीय सभापति जी, मैं सभी राज्य सरकारों से एक अनुरोध और करना चाहता हूं। संकट चाहे कितना भी बड़ा हो, भारत की तेज ग्रोथ बनाए रखना हम सभी का दायित्व है। हमें इसके लिए हर जरूरी कदम, हर जरूरी रिफॉर्म्स तेजी से करते रहने होंगे। ये राज्य सरकारों के पास बहुत बड़ा अवसर भी है। ये टीम इंडिया की भी बहुत बड़ी परीक्षा है। कोरोना के महासंकट में केंद्र और राज्यों ने टीम इंडिया बनकर कोविड मैनेजमेंट का एक बेहतरीन मॉडल सामने रखा था। अलग अलग पॉलिटिकल पार्टीज की सरकारें होने के बावजूद टेस्टिंग, वैक्सीनेशन से लेकर जरूरी चीजों की आपूर्ति टीम इंडिया के प्रयासों से ही सुनिश्चित हो पाई थी। हमें उसी भावना के साथ आगे भी काम करना है। सभी राज्य सरकारों और केंद्र सरकार के प्रयासों से देश इस गंभीर वैश्विक संकट का प्रभावी रूप से सामना कर पाएगा। आदरणीय सभापति जी, ये संकट अलग प्रकार का है और इसके समाधान भी अलग प्रकार से ही तय किए जा रहे हैं। हमें धीरज के साथ, संयम के साथ, शांत मन से हर चुनौती का मुकाबला करना है। आदरणीय सभापति जी, जैसा कि हम देख रहे हैं कि इस युद्ध को लेकर पल पल में हालात बदल रहे हैं, इसलिए मैं देशवासियों से भी कहूंगा कि हमें हर चुनौती के लिए तैयार रहना ही होगा। इस युद्ध के दुष्प्रभाव लंबे समय तक रहने की प्रबल आशंका है। लेकिन मैं देशवासियों को भरोसा देता हूं, सरकार सतर्क है, तत्पर है और पूरी गंभीरता से रणनीति बना रही है, हर निर्णय ले रही है। देश की जनता का हित हमारे लिए सर्वोपरि है। यही हमारी पहचान है, यही हमारी ताकत है। इसी भावना के साथ मैं अपना वक्तव्य समाप्त करता हूं। बहुत बहुत धन्यवाद।
Alright, so that was PM Modi, of course, addressing in the Rajya Sabha with regards to the situation in the West Asia and as to how sustainable right now India's position is. But with that, completely out of time, of course, on this edition of Ask Profit. Do stay tuned. India Market Close up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs, and AI that you can use.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Hiral Dadia. And, well, it's a prettier picture for the equity markets than the same time yesterday. And, in fact, if not turned on its head, at least it's a prettier market breadth as well, with a significant number of stocks trading in the green. And we're not too far from the high point of the day, actually a bit off the high point of the day. We did flirt with that 23,000 mark, but we've come off just a tad. But you'll take this 1.9%. If anything, the broader markets are looking significantly stronger. Pull up the mid-cap index, which is trading about 2.8% higher, and the small cap index as well, which is trading higher. So it's at the high point of the day for the broader markets, considerably so. And Hiral, let's pull up the heat map because it looks really good.
Just to add to this, we have to take this with a pinch of salt, Alex, because today there's expiry.
Yeah.
Tomorrow also there is expiry, and then it's a holiday. So your shorts somewhere are getting covered right now. So that is something that the trader needs to keep in mind. How much follow through buying you're going to see is going to be anyone's the guess. And two, the volumes are going to be very important to watch out for in today's session. But in this kind of a trade, you're seeing Coal India, Power Grid, which have been under pressure since morning.
Yeah.
That's where it's remained. You just have a Dr. Reddy's and Sun Pharma, two pharma majors who've joined the bandwagon, but they are also pretty much on the borderline, along with the SBI and Adani Enterprises, which is coming on. What is very strong right now is L&T, which has seen that good recovery in trade today. HDFC Bank has seen a good recovery. I mean, you can't say it's as smart as the amount that it lost, but good gains coming in from HDFC as well, which are contributing today.
Yeah, absolutely. You said it. And Larsen & Toubro has gotten pummeled out of shape in the recent past on account of the exposure that it has to the West Asia region. And clarifications did not work in trade yesterday. In trade yesterday as well, it got drubbed about 3-4% or thereabouts. Eternal, Swiggy both in focus on account of the increase in the platform fee, and this is something that is bolstering sentiment for these companies. Interglobe Aviation, if there is a cessation in trouble in the West Asia region, that relates to crude oil prices, significant inputs, and also travel starts again.
And plus, this is the new summer routes that have come in as well, which are giving it a fillip. Asian Paints, again, brokerages are positive. Dealers are indicating price hikes, right? So that is in focus. You know, one stock I want to notice over here is the ITC. It's pretty much flat right now, and this is a pure case of a bull and bear case over here, because what's happening with the ITC is, again, a very cheap in terms of stock in terms of valuations, but brokerages are still very divided in terms of ITC, and that's the stock that is in focus as well.
17.7 times trailing price to earnings, and
when would you ever see ITC?
5% dividend yield, which is incredible. It's trading at less than 300. It's dropped from over 400 in just 2026. So it's taken a big drubbing. The question is, where does it go from here? We should also pull up the broader markets as well, right? So pull up the broader market. This is essentially your sector heat map. I'm talking about the stocks from the broader market. So look at the key movers in the broader markets, and you'll see some very big movers. Linde India, it's a play on gases, industrial gases as well. Alkyl amines, you have Supreme Petro, you have Avanti Feeds, Aether, NoSil. On the other end of the spectrum, not too much in the way of very big losers, but you have Rajesh Exports and a couple of others, TTK Prestige.
Yeah, your biggest loser is just down 5%, right?
Absolutely.
And your amines companies are playing a catch-up right now, so which is a good thing as well. Your EV companies are playing a catch-up, so you have your Aether, you have the likes of a JBM Auto, Electra Green, so all of them playing a catch-up on that additional 35,000 buses that will potentially be ordered after FY27. So there is a fillip that sentiment, Alex, is there in terms of positivity, and I'm sure viewers will agree to that as well. But clearly, sustainability is the key, and let's then look at all the factors.
Let's look at the factors
from here on. If you see in terms of markets as well, a 500 points gain is what we've seen on intraday basis, which is a good thing. But Nifty has recouped nearly 4/5 of yesterday's losses. It's still not 100%. Now, Trump's 5-day postponement of the strikes announcement has provided a breather to the markets overall. So that is the key. How long in terms of sustenance is what we have to see. In terms of Nifty, 23,000 to 23,050 is acting as a strong resistance for the markets. And that's the reason why you're seeing it hit that 23,000 mark and then retrace back. A decisive move about 23,067 is needed to shift the sentiment. So if on a closing basis, you see Nifty closing about 23,067, that will give you some indication of where we could go from here on. Sectors, again, it's auto which is leading the gains, which is again a positive because that has been a sector which has been beaten down over the last couple of days. And the cash market turnover, that's what I've been talking about, has been largely flat as compared to yesterday. Now, if the turnover is flat, if the volumes are flat, there is no major conviction that the retail investors are having in terms of where markets go, and it's mainly a short covering rally that we are seeing in markets. So that, puts 1 plus 1 together, and this is what we mentioned yesterday as well on the back of the news. Your F&O market turnover, there you go, has doubled compared to yesterday. So you know where the action is on the back of the short covering that we are seeing. Apart from this, if you see in terms of the Sensex monthly expiry, which is tomorrow, so today is the Nifty expiry, tomorrow Sensex expiry, and that's why the volatility is high as high as we speak. So clearly, Alex, if you go to see in terms of markets, there is cautiousness. The sentiment is trying to turn positive, but whether it stays positive or not is anyone's guess.
Yeah, it's an important point that you're raising. And let me take that across to our guests. We've got Amardev Singh, Senior Vice President Research at Angel One, and we've got Pashupati Advani as well joining in. Thank you so much, gentlemen, for taking the time, and good afternoon to the both of you. Amar, I'll come to you first on the charts because there's green across the board today and the breadth looks particularly healthy. Perhaps not necessarily polar opposite to what we saw yesterday, but at least it'll come close, right? Is this something that you would build on based on the technicals that you're studying right now, or is it too early to call?
Yeah, I would say that, somewhere or the other, market definitely trying to form a bottom because the correction has been very steep from almost 26,400 levels to sub 23,000 levels, and that also towards 22,600. So the fall has been very steep. So yes, the markets are actually trying to form a bottom, and many of the stocks have corrected significantly. So those from a longer term perspective, they should definitely look at entry, at least on a tranche basis, not exactly going all out, but because what we are seeing is primarily more news driven, and it's primarily the Iran issue which is there, and the crude oil prices, because the sort of volatility that we are witnessing in crude oil prices clearly shows that there are still concerns, because till the time we don't see crude trading consistently below the $80 mark, I'm talking the Brent crude, $80-85 mark, I will say that there would be some sort of knee-jerk reaction in the markets. But yes, from a longer term perspective, yes, there could be some buying opportunity. But I would say still early days, still we find some resolution which really has some meaning and has some, I would say, sustenance from that perspective.
Pashupati, I want to come to you on this one, because what Amar is just pointing out on the charts is indicative of the sentiment right now. Any news or update or even an inkling that there is a cessation in the violence and in the geopolitical uncertainty is getting bought into at a very furious pace. So there is also something of caution that should be at play, right? Because you don't know where this is going. So what would your approach in this kind of a scenario be?
See, there are three indicators that I think we have to look at for looking at the West Asia crisis, if you want to call it. One is the INR USD, which is still hovering just below 94, which has not actually cracked back to 90, 92, 92 and a half, which it was before the crisis started. The second is the price of crude. It's still over $100, and as Amar said, that it should be at 80 for us to be comfortable, because every dollar that it is higher is costing our country like $4-5 billion a year. So it's like quite a lot of money that's going out the door. So the rest of the market is just shuffling itself and, trying to look for opportunities. And of course, we got hit 3-4 days, and you're showing a chart of Brent at 97.5 and WTI at 90. But basically, we need to be well below 80s for the companies to be comfortable with what's going on, because we're hugely dependent on oil imports, and we're also hugely dependent on that for our power. So I think that, these are things that we need to look at. And, whether, as the Prime Minister yesterday said, we have to be cautious, we have to use less gas, we have to, LPG, we have to conserve, things like that. All good things. If the country changes behavioral pattern, great. But right now, it doesn't look like it's changing, and it's watch and wait. And I think that's what a lot of people are doing on the side.
Stay with us, Pashupati. In fact, let's pull up a Maruti on the screens and see what that counter is doing in trade. They've just approved the addition in terms of the first phase of capacity in Gujarat. Now, just to be noted that this is the major capacity expansion that they had announced back then in Jan 2026, and the investment was close to around 5,000 odd crores, if I remember correctly. Puneet joins us with all the details. Puneet, what would this mean? Because we're talking about a 5,000 crore capacity expansion that was announced in January, and this is the first phase that gets announced.
Well, most certainly, and it's a part of Maruti's long-term plan to go from the current capacity, which is roughly around 26 lakh vehicles to be produced per annum, all the way up to 40 lakhs by 2030 and 2031. So essentially, this is expected to be and lead the next phase of capacity addition. Now, for Maruti Suzuki specifically, they had commissioned roughly 3 years ago 250,000 vehicles. So by the end of 2026, the calendar year 2026, Maruti will already reach 31 lakhs out of the 40 lakh target that they have. Addition of this capacity, which they had approved of almost 5,000 crores, as you rightly mentioned, in January, plus the 10,000 crores now, this will lead to the other 8 to 9 lakh addition that the company has mentioned specifically. So with the new investment announced today, that will add another 250,000 vehicles. So on the way to almost 35 to 36 lakh units per year is what Maruti is looking to produce, and hence you will see another round of announcement by the company maybe in the next couple of years, but onwards to that target of 40 lakh vehicles that the company wants to produce per year by 2030.
Just a quick follow-up to that. In the GST update last year, when the GST on small cars was reduced, immediately after that, the management had said that they would look at a dramatic shift in the fortunes for that segment, which had been dwindling. They were swinging from a negative volume trajectory to a positive volume trajectory. How much of this capacity addition is on account of that experience that they were witnessing and expect going forward as well?
Well, there are two key things, Alex, to what you mentioned. One is, of course, that a lot of the current capacity is now being utilized for the domestic small car production. So you've seen slightly the export numbers starting to come down a little bit to focus on the current demand for the small cars. And the second key aspect is the addition of 250,000 vehicles, as I mentioned, which was expected to be sometime this year, has been put on the fast track, is now expected to come by April of 2026, which is next month. So a lot of that will go into the small car production, but definitely the GST was a big kicker for them. They are focusing on the domestic car demand now versus the exports a little bit, of course, at this point of time. But all these plans of almost 5 lakh cars capacity added in 1 year for Maruti Suzuki is because of the GST rate kicker.
Right. Thank you so much for that. This actually puts things into perspective as well. Pashupati, any view when it comes to Maruti? I know, the announcement was made back then in January, but this becomes the first phase where they're starting off. And to add to this right now, you're seeing that momentum, which is again started to build up with regards to auto. Any views that you have for the sector right now?
Yeah, I think Maruti is the best in execution. They're able to pivot very quickly, and as you said, they had an expansion going. They pivoted from larger cars to smaller cars, and they're also getting involved in the hybrid market as well, and some EVs. So I think that they are in a position to do a lot. And as you said, if their idea is to make 4 million cars a year, they are heading towards it, and I think that's a great number. And they'll continue to spend and they'll continue to build because they are clearly number one in India by a long margin, and they want to make sure that they retain the gap.
It's a fair point. All right. It's time now to talk about the stock of the day, and we've picked Swiggy, but it's actually both Swiggy and Eternal that are doing particularly well in trade today, because Swiggy has followed Eternal in raising its platform fee now at 17.58, and that matches Zomato's latest hike. It's a steady climb that boosts high margin revenue for food delivery players, as well as fuels their expansion plans from dark stores to better take rates. Mahima joining in to put all of that into perspective and kind of give you a perspective on how these two players are operating in this highly competitive space. Mahima.
Right, so Alex, as you rightly mentioned, Swiggy has kind of followed the price hike that Eternal had announced earlier last week. Both of these stocks today are bumping up on the back of that. Both of their price hikes now stand at 17.58 rupees, and this is inclusive of GST. GST was announced in September 2025. That's when 18% GST was applicable to these platform fees, and post that, considering 14.9 of platform fee plus the 18% GST, the amount comes to that 17.58. Zomato had also recently done the same from 14.75 to that 17.58 mark, and Swiggy also today came out and has indicated that their platform fee is also hiked to that level. Now, if you take a look at the trajectory of how these price hikes have taken in the past 2 years, right? If you take a look at Jan 24, it stood at 4 for Zomato. Earlier in 2023 August, it was at 2 rupees. From that, we've today come to 17.6 rupees almost. So from that 4 rupee in Jan 24 to 5, 6 and 10 rupees in October 24 for Zomato. And similarly, Swiggy has also followed that trajectory from 5 rupee to 10 rupee. And now in March 2026, we stand at that 17.6 rupee mark at that platform fee. Now, why are these stocks buzzing today positively on the back of this platform fee hike? Well, this directly translates to their bottom line. First of all, this boosts their high margin revenue, so this will have a direct impact on their EBITDA as well as margins and the bottom line as well, in terms of directly contributing to the bottom line. Plus, this entire positive cash flow coming in will help their expansion in terms of dark stores. Zomato is still very aggressive when it comes to their dark store expansion for Blinkit. And lastly, this will help improve their take rates going forward as well. So this is the overall view as to why both of these counters are buzzing today and why this hike in platform fee, while it is not very positive for a consumer, from a consumer point of view, but positive from a company point of view.
Yeah, thank you for that. What's interesting is you have Swiggy, who's announced the price hike today in terms of platform charges, but it's a Zomato which is seeing smarter moves. Amar, very quickly on the charts, what are you looking at if you have to look at both these counters? Any pick?
Yeah, I would say Eternal is a better pick as compared to Swiggy. We've seen some sharp correction, but we've seen some now pullback from almost 210, 220 levels for Eternal. So Eternal is a better pick. We could see a rally towards 250, 260 levels, from where again we could witness some sort of selling pressure. So it's more of consolidation for both of these stocks.
Okay, consolidation.
But Eternal is the better pick. Yeah.
Okay, so Eternal a better option. Pashupati, a quick view when it comes to new age companies like Eternal and Swiggy? Do you really have faith in any of these names?
No, I have faith in both the names. They're very much a part of our culture and they're very part of our lifestyle. I actually haven't gone to the nitty-gritty to see who's making 2 rupees more here and 1 rupee back there. But so I think, if you like the sector, you buy them both or you buy one or the other. They both seem to be performing similarly. So, just wait and watch. I can't see much of a differentiator between them. That's the only thing.
Okay. So that's with regards to where Swiggy and Eternal go. I think, Alex, the key from here on is going to be who wins the race, because now your platform charges are absolutely at par. The next big factor comes in is their negotiations that they do with the restaurant owners in terms of the margins that they get. That becomes the X factor for them now.
Yeah, at least in the short term. I wonder what happens in the long term, because you had, which was a hospital company we spoke to a short while back, that was using drones for Kim's, right? No, it wasn't Kim's. No. It was Narayana Hridayal. I struggle with that name. I was going to say Narayana Healthcare, okay? Yes. But they're using drones to deliver medicine. So why not in the future have drones to deliver your pizza?
Absolutely. They have tried it and tested it as well. So let's see where it goes. But moving on to our next big story of the day, you're talking about a HDFC Bank. Now, what is interesting is the comment that has come in from SEBI Chairman Tuhin Kanda Pandey, where he's come out and said and issued a stern warning saying that anything that happens with regards to corporate governance, specifically a chairman, he has to follow certain protocols. The move follows this unexpected resignation of Atanu Chakrabarti at HDFC Bank, which actually put a lot of pressure in terms of the stock price as well. Let's first quickly listen in to a bite of that conversation and the stern warning that Tuhin Kanta Pandey gave as well.
IDs are required to adhere a certain code of conduct where the IDs have any concerns about the running of the company or a proposed action, ensure that they are addressed by the board, and to that extent that they are not resolved, insist that their concerns are recorded in the minutes of the board meeting. Also, there is in 11, at point 11, a report concerns about unethical behavior, actual or suspected fraud, or violation of the company's code of conduct or ethics policy.
Okay, all right. We're joined by Swapnil Kothari, senior lawyer, Supreme Court. Just give us a perspective on what kind of process would be followed in this case. Swapnil, thanks so much for taking the time. The SEBI and the market regulator, of course, stepping in and pointing out to the vagueness of the statement that was made by the outgoing chairman of HDFC Bank. And that really is what I think a lot of market veterans have also pointed to. If there were issues, then why were they not pointed out over the course of the last 5 years or even the last 2 years? And even in the board meeting that he was in before he left, he failed to give any specifics. So what will the law firms look to investigate?
Well, Alex, let me tell you something. We do not know as to what has happened or what transpired in the board meetings. Whether the issues were raised to the extent that they were extremely clearly raised, or whether they were vaguely raised, or whether they were subtly raised. But I refuse to believe that they were not raised. I'm sure they were raised. Now, how they were tackled, what was the response of the board, whether it was just the Dubai financial security notice that came because of mis-selling of ATI bonds, and which resulted in not onboarding any more clients in September 2025. Whether that was the only issue, whether you have personality issues with the people that you're working with, all of those things are extremely, extremely sensitive, and one will never know the actual truth in that sense. But one can understand that, yes, there could be these issues, and the way things have been handled, and you've mentioned vaguely, you being the person who's resigned, as Atanu has mentioned vaguely, Mr. Chakraborty, that there was some sort of not congruent with my values. Now, I believe that HDFC is a top-notch organization. We have some of the top people at the Help of Affairs, Mr. K.K. Mistry being one of them, who's been the interim chairman now. And I think the rest of the board is equally mature and ethical in its practices. So I would not want to get into that to say that, well, there was some sort of unethical practices. Now, as to how his concerns were dealt with is a separate issue. Maybe he felt that they were not being dealt with to the extent that they need to be dealt with. Now, that is, a vague area, a black and white area, and no lawyer can ever tell you that this is what should have been done or that is what should not have been done. Now, the good part of it is that this has not reached the courts, and this will take some media space in some time. Mr. Jagdishan had come out and spoken about it in different newspapers that we believe in complete transparency, etc. Now, one of the points that I would like to touch upon is the resignation of the independent directors, which is what Mr. Tuinkanta Pandey pointed out. Recently, before this resignation took place, there has been a spate of independent director resignations where they just say, I have my own priorities and that's the reason why I'm leaving. Now, what happens is that when you're an independent director and you make vague statements like this tends to throw some sort of a cloud of suspicion as to what was transpiring within the company. Now, you could be having a genuine priority, but when you look at a slew of resignations from different people, then it amounts to the fact that independent directors who do not want to, and I'm an independent director in several companies, but should I were to resign, I would be very clear in why I want to resign.
Correct.
Now, sorry, go ahead.
Yeah. So, Swapnil, everything said and done, what is important over here is for an investor to understand what is happening, because you have SEBI who's come and laid down the rules saying that, okay, you have to be absolutely clear in terms of what you say, and if you have any concerns, that is something that you need to discuss with the board, and all of them have to be actually accounted for. Now, my question is, you're talking about a review over here that an external law firm will be doing. Just for a legal clarification, how will this be different versus an investigation?
Well, I think the review will be to the extent to go into the minutes of the board meetings, to actually interview the people who are in question and how much of that actually comes out and to what extent, because no law firm can say for something like HDFC Bank, which I would believe would be pretty much above board. Yes, you may have delayed a little bit of, say, sacking the 3 employees. Now, I could say that, they should have been sacked in December. Or I would say, no, they should have been sacked in February 26 because we just can't sack people just because, there are some issues raised and antenna is raised and things like that. So, these are very vague. There is no clear-cut law that says that you have to sack people who are at fault within such period of time. Now, the point is, Hiral, that when an external law firm reviews it, it's going to see both the sides of the equation, hear both the sides, and then eventually come to a conclusion and prepare its report and say that, well, this is what it is. And then place it before the investors. Maybe HDFC Bank will put it out, and it should put it out because there's nothing to hide in that. And, let me go one step ahead. To presume that these things have not been discussed at the board level is a little bit of a misnomer. I think the investors should be cognizant of the fact that these things would have been discussed at the board level. And Hiral, you and I both know that personalities at times do not match. Ideas do not match. That's where people tend to resign. Some people are more sensitive. Some people are a little bit more, equanimous in that sense and more mature in that sense that, okay, as long as most of the things are going, the way they need to be going, I should not take this personally. I'm not saying that's what Atanu did, that he took something personally, because I'm not privy to anything that has happened. But from the looks of it, if Tuin Kanta Pandey said that no, things are fine, KK Mistry is the interim chairman, then I don't see any reason to second guess his judgment and say, something must have been wrong, but all of this has been covered up. The answer is no, I don't agree with that.
Sure. Yeah, it's a fair point, Swapnil. Thanks so much for taking the time. By the way, you should see the glares that Hiral gives me when she's, you can't see her on camera. She doesn't always agree with everything that I say, but then we managed to plod around.
Strike a balance.
We managed to strike a balance. Swapnil, thanks so much for taking the time. Pleasure having you. All right, let's talk about HDFC Bank and Pashupati with us still. I wonder what you make of this, because there's this uncertainty, Pashupati, with regard to HDFC Bank, and while it's clawed back a little bit of ground, I wonder whether you are looking through this bit of noise that we've heard over the last couple of weeks or so, particularly last week, and whether you see this as a good opportunity if you've got a long enough time horizon.
Well, the thing is that, actually, let me just preface by saying I own HDFC Bank, so that is one thing. I've held it through the thick and thin, and it's been a great investment for me. It's also a large chunk of our index, and it's like almost a bellwether that represents the country. So it's not a stock, and it's got a listing in the US. So it's not a stock to be trifled with in that sense. I think this current governance issue is one of the issues which hopefully they will clean up. It always takes time to give out the news. But the reality is that doing this HDFC Bank, HDFC Limited merger is obviously a lot tougher than people think. Because the first big merger, it puts HDFC Bank in the so-called big leagues. I mean, it puts it among the Chinese banks, because the Chinese banks are still considered larger. And but the thing is that, putting branches together, putting employees together, winding down people is not an easy job. And also, we've also moved a lot in terms of automation. So, it's the main issue is to retrench the number of people that are working at the bank, because you can't really find things for them to do. And those are the real issues in the merger. I'm a little disappointed that it's dropped about 25-28%, because it was over $1,000 not so long ago. But some of it's to do with the market. The market's off 10-12%, but it is a big part of our index. It is hurting our index because it's getting hammered. And God help that they should get the governance situation sorted and out to the public. And maybe the FIs will stop selling. They have been selling HDFC Bank because it's very much FI owned.
The FIs who have been selling. Thank you, Pashupati, for that view. But, it's that time of the day where we go to Samit Sarkar with all the chatter from the dealing room. Samit, I think it's an interesting day, and I'm sure you've got a lot of data points in terms of which stocks to buy because of that recovery that's coming in.
Well, yes, we have seen a recovery, but then sell on rise continues to remain the strategy on an overall basis in the market. 23,050 is acting as a strong resistance level, and dealers are indicating that we need to cross that level decisively for a strong up move from here on.
Few stocks that dealers have highlighted. Firstly, CSB Bank. There are strong buy flows on the large HNI desk. Dealers are expecting that the fourth quarter updates, pre-quarter updates, would be quite strong. That could come in from CSB Bank. So keep an eye out for that counter. A couple of stocks, one small cap counter Nitco and one large cap counter Lodha Developers. Dealers are expecting some land deal to happen between both the counters. Lodha might acquire some land from Nitco, so keep an eye out for Nitco as well, because they would be the bigger beneficiary here. Samman Capital, we saw a strong up move in this counter during the day. Obviously, some of it was also related to the move in the market, but this counter is continue to holding up those gains. And the buzz on the street is that there could be a positive news flow that could come in when it comes to Samman Capital, and there are buy flows that dealers are seeing on the PMS desk. And lastly, when it comes to Alkyl Amines, dealers are indicating that a large, prominent, influential HNI has been a buyer in trade today, and that is the reason why the stock has perked up nearly 15 to 18% in trade. Keep an eye out for Alkyl as well.
Absolutely. Some of these amine companies doing particularly well. Thanks so much, Somit, for getting us those details. I do want to go across to Amardev Singh. Amar, we took an index view from you and we spoke about individual stocks, specifically Zomato and Swiggy, but we haven't asked you what you like at this moment. What are the individual stocks that you're paying close attention to?
Yeah, so one stock which I like at the current levels is JK Cements. So the stock had witnessed a significant correction of almost 40%, and currently it's around crucial support zone, so we can expect a pullback. But what we need to remember is that given the way the markets are behaving with regard to the Iran news, it's more of a short-term play. So currently it's around the 5100 level. One can expect it to rally towards 5400, 5450 levels. And the recent low which the stock had made, that was somewhere around the 4800 levels, that can be a stop. So this is one stock one can look at. And the other stock which we talked about is Eternal, is one stock which seems good technically on the charts. Despite the markets correcting, the stock has not corrected significantly over the last few days. So that shows that there is some strength, which is inherent strength in the stock. And the stock is also at a very good level. So buying around the current levels for an upside target of 260, 265 on the upside, and the stop loss needs to be below the 210 mark.
Right, all right, individual stocks that Amar likes. On that note, Amar Pashupati, thanks so much for taking the time. Pleasure having you as always, and let's hope the next time we speak that this conflict is resolved.
Thank you.
All right, we have to slip into a very quick break. We'll get you the top trading strategies on the other side, so stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come. Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most.
Welcome back to India Market Close on NDTV Profit. Now, clearly, the markets are seeing that good amount of recovery as well as we speak. That rebound, how sustainable it is going to be is the question, because from the day's highs as well, we are trying to come off. We're now seeing gains of around 1%, and I mean, 1.7% as we speak. Let's also get in Gaurav Sharma from Globe Capital to understand what he is watching out for. Gaurav, good afternoon and welcome to the show. You know, the moves that we are seeing in today's session, pretty strong. The volumes in the cash market are seeming to be slightly lower. It's the F&O space which is seeing heavy volumes. What is the sense that you're picking up in terms of the mood in the markets and where from here on?
Hi, good afternoon, Hero. Thanks for having me today. So, yes, the markets are little encouraging, but this is not the time to actually, being driven away with the news flow that is coming in or with the uptick that we are seeing today. It is a 400 points on the board. We have just filled the gap left over after yesterday's gap down opening. Nifty did not even manage to surpass that point. Again, that is a red flag coming in. Although that was the little I was expecting, that at least if a sustained buying has to happen, Nifty needs to go past that level, sustain above that, and if a closing comes beyond that, that will be an icing on the cake, further indicating towards a rise towards 23,400 and higher levels, but that did not happen. Even we could not see a slight sustenance above the 23,000 mark. So there are a lot of other things going on. You've pointed out the higher volume in the derivative segment. That is due to the, the benchmark also. It is due to the expiry, and we are on to the final week for it now. So position change, and due to volatility also, there is some kind of a relief that people are squaring off their positions, because the kind of carnage and sell-off seen in yesterday's trade was a kind of a second knee-jerk reaction that we have witnessed in these past 18 to 20 trading sessions, where a southward decline just kept hammering the investors.
Yeah, that's a fair point. We're also joined by Deven Choksi, the Managing Director of DR Choksi FinServe. Deven bhai, thanks so much for taking the time, and good afternoon to you. Just taking from what Gaurav was also just mentioning, yesterday's move down, a lot of people were calling it the last capitulation. So I'm wondering, notwithstanding all of the uncertainty as things stand even now, and whether or not that 5-day breather remains to be the case, is this a good opportunity to buy in and build out your portfolio, or would you say that there's still the risk of further downside? Have we more or less reached that bottom, or is it too hard to call?
Yes, Alex, good afternoon. And I think very pertinent point, I think, which you are raising. Well, I think the more important part here is always to understand in the last mile of the fall, who participates. Generally, in the last mile of the fall, in every such situation, whenever you have had the fall in the past, the participation in the last mile fall is a panic participation by the retailers, because they are the ones, I think, which who have created the long side book, and I think created out of the long positions in F&O market, or at the same time, I think the MTF book. Now, as we read, the total MTF exposure in the market today is about close to about 1 lakh crore. And that's where possibly, I think, the larger amount of pressure is getting built as far as, I think, the fall in the last mile of the crisis is concerned, which to my mind, I think has happened. I think when Nifty broke 22,800, possibly I think most of the pain is out of the market. Now look at the fundamental side of the story, where again, I think what the market has taught us all these many years. Whenever the Nifty on a trailing 12 months valuation is putting around 16, 17 times, and whenever on a forward basis it is putting below that, that is 15, 16 times, I think the market has seen the buying emerging. And in my viewpoint, I think if this is the time when probably I think we are reading the Nifty 1 year forward, we are pretty close to 17 times. And that's where probably I believe that I think the market may have made most of the bottoming out process by now. Some good news, some tailwinds, and definitely I think the market will start looking up. Generally in the recovery mode, when the market is, I think the market would possibly recover between, I think, 20% to as high as 60% in following 1 quarter to 18 months. I think that is where I think we have seen our past. So maybe that may help in taking the direction forward as far as I think this fall is concerned.
Yeah, it's a fair point. Just to get a sense of where things stand with regard to the economy as well. And I understand that a lot of investors look bottom up, but let's face it, there are several macro factors that will lead to micro trends as well. Madhvi Arora, lead economist, MK Global Financial Services, joining us right now. Madhvi, thanks as always for taking the time and pleasure speaking with you. I want to refer to your latest report where you've raised your expectation for inflation and you've cut your estimate for growth. What's playing out here beyond the obvious of crude oil prices and the flow through? Because I think practically everybody understands that. But what specifically, when you look under the hood, is going to play out?
Hi, Alex. So I think, as much as a static analysis one may do with regard to, oil price shock are important, but they're also very imperfect at this point in time. The current episode is no longer merely a price shock, but a material supply shock. And we are seeing spillovers across multiple channels. Now, with gas supplies being curtailed to industries, firms are increasingly restoring to production cuts or price hikes to manage disruption. We've already seen hospitality sector being the first one to face the domestic gas shortage, but we are also seeing production curtailment across major industries such as auto, chemicals, food and beverages, metals, fertilizers. And if energy shortage intensifies, we will probably see that further coming off, and most of these industries again running below their capacity utilization, average capacity utilization level. So, I mean, it may take time to really understand or gauge the magnitude of the current shock that we are bearing. My hope is that this sort of gets contained in the first quarter of this coming financial year, and rest of the year would probably still be hovering somewhere close to average around 70, which still gives us, sort of an upside on Brent for an average of around $80 per barrel, which is a direct hit to growth. Of course, the longer the conflict drags on, the greater the risk that energy sector disruption generate a more non-linear hit to the growth of the economy via price shocks, via quantity constraint, and via sentiments and financial channels as well. The only starting comfort here is that the starting point has been pretty strong from India's point of view, which sort of gives us some buffer to navigate the macro adjustment. But yes, assuming that we have a manageable oil shock, which sort of is contained in the first quarter, we still are looking at growth hit to the extent of around 0.4 to 0.5 percentage point of GDP, which implies that for us this year, the GDP growth base case becomes 6.5%.
Okay, so Madhvi, good afternoon, Hiral on this side. Now you're talking about the macros over here. How are you seeing it actually impact the rupee as well? Because what I read from your report is you're expecting the RBI to allow calibrated rupee depreciation. What would that actually mean according to you? And two, the levels that you would be tracking in terms of where the rupee could actually settle?
See, RBI's battle is again going to be very difficult, right? There is no simple playbook as to how the monetary policy response should be for this kind of energy price shock. Again, while we are looking at inflation shock being contained because we believe a large chunk of this oil price shock would be absorbed by OMCs and the government of India, we still are looking at inflation crossing 4.5%. That's not a big concern for me. For me, at this point in time, the bigger concern would be as to how the Reserve Bank really manage the expected or a disruption in the macro financial segment of the economy. And that is where I think the problem lies, because we are looking at a very negative play both in forex and fixed income market. So obviously the trade-offs are very clear. What we have understood through the year is that when we were bearing the the trade deal shock, RBI somewhere was letting the rupee find its own level. Of course, it was all managed, but the direction was not necessarily changed. And that, I think, that template has been repeated by the Reserve Bank in this recent shock as well. Of course, it's been much shorter, it's just been a month. But what we understood is that the Reserve Bank has sort of, again, preferred to have a calibrated easing of the rupee to play a natural economic adjuster in this current shock. And we believe that that behavior of the Reserve Bank probably will continue, where they will be doing a calibrated adjustment of the currency and still intervening at the margin to ensure that the speculators do not have their way. But that will also mean that there could be a shock which will also spill over to the rates market, where we expect the 10-year yield may actually, probably linger around 6.95 to 7 in the next 1 or 2 months. But rupee is clearly poised to touch 96 plus in the next 2 months if these things, if the current condition continues.
My goodness, not a line that I anticipated that I would hear in 2026. Madhuri, thanks so much for taking the time. I guess higher for longer is the theme for this year, for 2026. So let's see how it pans out. Thanks so much for taking the time.
Thank you.
Did you think that in 2025 and 2026, did you think that we'd be talking about rupee at 96?
96, that's what I'm saying. This is something, and I actually, this is the first one I've heard in terms of rupee at 96. So I'm going to remember MK very closely the moment it hits 96, and Madhvi will definitely be on our radar.
We've come off the low point, the high point.
High points, correct. And just one quick addition that I want to make is with regards to the government's fiscal deficit target for FY27. They've actually revised it upwards to 4.5% of the GDP right now.
MK
this is, no, I'm talking about the government.
Okay.
And this is on account of the base revision that has happened. Now, the question over here is, what will this mean for the economy? If they have to continue to achieve this kind of a number, they will have to actually target a higher nominal growth rate as well, and that is going to be something
but won't
which
it happen
we will have
now?
to
It will
look
happen
at.
if your inflation goes to 4.2, 4.3%, and if your real GDP growth stays at 7%, then you're automatically moving towards 11
but what I'm saying is, if they want to prevent the fiscal deficit ratio from rising further, correct, they will need a stronger nominal GDP growth rate. So this is something that everyone will have to keep an eye on terms of the macro numbers. But let's get back in terms of the stock conversations that we've been having.
In fact, Devin, I want to come to you on one of the implications of the rupee sliding, and whether it hits 96 is a basis of hypothesis, right? You might actually agree with that or you might not, but the direction that we've seen and the slide that we've seen is pretty sharp. 5% last year, close to 4.5% this year, 2026. This is positive for a few sectors, and one of them is IT. That entire space has gotten hammered out of shape, and so therefore the question is, are valuations compelling, particularly when there is a possibility that Q4 on the earnings front might actually be better than a lot of people had penciled in?
Yes, Alex, I think I certainly agree with you that earnings in the fourth quarter are going to be better than what one has expected. Particularly, I think IT you're talking about. Generally, they have 1 or 2 quarters of advantage when the currency gives up. I think the depreciation of rupee happens. 1 or 2 quarters of advantage is clearly seen in the books. In some cases, I think you may see the profit margin improving by about 0.5%. In some cases, little above 0.5% as far as IT companies are concerned. So that possibility, we do not rule it out even in this particular situation. Neither we are ruling out a possibility of, I think, they having a higher amount of inflow intact, I think, as far as the new order book is concerned. Largely because of the requirement of the AI-led growth, which is there in every customer segment. So certainly, I think some of these companies are going to be playing a major role out there in winning some of the larger contracts. So we remain relatively more hopeful about the companies which are more into the embedded space, companies which are providing the solution to the end customer, B2B customer, I think through the integrated hardware as well as I think the software part. So that is where probably some of the mid-tier IT companies could play relatively better role compared to some of the larger companies. So larger companies may bounce back because of the valuation advantage that they have at this point of time in a normal market situation.
Okay, so that's with regards to a few of the IT names that we're talking about right now as well. But moving on, the street, has a very divided view when it comes to FMCG, major ITC. In fact, that sector itself is pretty hot right now because people are banking on FMCG as an investment bet in these geopolitical issues. But let me head across to Mahima to help us understand what is the street looking at when it comes to ITC. I mean, currently that stock, Mahima, is trading at what, 291. Brokerages, some are positive, some are negative. What's the case that you're making?
Right, so today two different brokerages have come out. So basically, and this is on update of the price hikes in the cigarette space that ITC has taken. They've taken the, prolonged 3 different price hikes, where what they've done is the first way is that the same qualities and same cigarette but slightly shorter in terms of length. The other is that it is going to be same quality, same length and slight price hike. And the last one is that it's going to be same quality, same length, but at the same time the price hike will be taken but at a subsidized rate. So this is what the overall update is. Now both UBS and Goldman Sachs have given their different views on what ITC stands and where ITC stands right now. UBS says that the new prices should protect volumes going forward, but on the flip side Goldman Sachs is saying that earnings cut factor is, they're kind of factoring this modest price hikes, and despite that there is going to be earnings cut coming in at least in FY27, because price hikes might overall lead to some negative, will have some negative impact in terms of volumes as well. UBS says that they've adopted the 3-pronged pricing strategy to protect volumes, the 3 different prices that I told you about. But on the flip side, Goldman Sachs is saying that lower earnings will have an overall impact in margins. And this is because both the cigarette space as well as the FMCG space is going to have impact of higher raw material prices from crude oil plus the tobacco leaf prices going up. Now, in terms of valuation, UBS is saying that valuations at this level is very appealing, and that is why they are bullish when it comes to ITC at these levels. But on the flip side, Goldman Sachs is saying that lower earnings estimates, so basically they've lowered their earnings estimates for FY27 as well as FY28, 6% by FY27 considering the price hikes plus volume impact, and 3% in FY28, and that is why they've also lowered their target price. They've maintained the neutral stance but lowered the target price significantly to 330 from 385 earlier, and UBS has still maintained buy with a target price of 395 on ITC. So this is the overall difference of opinion coming in from both of the brokerages on ITC.
Very, very interesting. All right, gentlemen, I want to get a very, very quick view from the both of you. First, Devin bhai on ITC. Less than 18 times price to earnings on a trailing basis and a 5% dividend yield. Is it not attractive at this point?
Yes, absolutely. I think suppose if it is 18 times overall, I think if you look at their FMCG business, I think this is quoting a 10, 11 times price earning ratio, which I don't understand. I think how exactly such kind of lower valuation would mean. I think, to my mind, I think this is where probably the re-rating has to take place in businesses. How soon, how fast, I think it will happen. Again, I think depends a lot on the market condition. But I would not rule out possibility of 10 to 20% kind of a re-rating on the stock price in a normal market situation, should we get in due course of time, at least in the near future.
All right. Gaurav, ITC specifically, if not just ITC, then the one that is moving up higher today, which is Asian Paints, it's one of the top gainers today. So in that entire consumption basket, which would you pick?
Alex, good afternoon. As far as ITC is concerned, on an immediate basis, I'm expecting a further dips towards 265. So that would probably the level where one, at least I would be considering accumulating or averaging it out and recommending it to our clients. Now, as far as Asian Paints is concerned, yes, this probably could be a candidate, because the news point on which we have seen this recovery is a 6 to 8% uptick in its prices expected in April. So I was expecting somewhat of a 3 to 5% of an uptake. But since the news items are suggesting a 6 to 8%, this is way above the expectation. I think this will be an added advantage to it, and a further rise can be seen. So yes, I would prefer Asian Paints for that matter in this regard. And as far as other FMCG stocks are concerned, Britannia and Tata Consumer catches my eyes more than ITC.
Okay, so Tata Consumers a better bet as compared to ITC. In fact, we'll talk about Asian Paints to Devin as well as the paint industry as well. But before that, sources tell NDTV Profit that SEBI is considering opening up the commodity derivative space to FPIs. And this is going to be interesting news. This will actually start with cash-settled contracts in metals, energy and bullion. Nimit joins us with more details on this development. Nimit, what are you picking up? Because yesterday we were talking about the FPI's netting of positions on a single day, and that would give them somewhat of a booster as well. And now, sources are telling you that they are probably going to give them entry into the commodity market as well.
Absolutely. The SEBI seems to be doing a lot of thinking about how they can ensure the FPIs have a good time when they're investing in India. Like you said, yesterday they did the netting rule, which makes it easier from the entry and exit. And this is a rule that will now allow further participation to the commodities market space. Now, the SEBI Commodities Derivatives and Advisory Committee is deliberating how to boost participation in the commodity segment as well as the cash settlement segment. As part of that, they are allowing foreign portfolio investors, and it's still a rule, they've not allowed it yet, but they're proposing that to allow foreign portfolio investors to invest in non-agricultural commodity segments. Of course, this includes metals and energy and bullion, and the agricultural commodity segment also has not been put off the table. It's just that it's very linked to food prices and it's more sensitive, so that decision will take place later. Now, how they will do it is the preferred method, the committee members say, is through cash settled contracts. This means as opposed to physical delivery, which is common in commodities contracts. Now, physical delivery will mean FPIs will have to put in place infrastructure, warehousing, logistics, and a bunch of different licenses and registrations, which makes the job really cumbersome for FPIs. They want to avoid that. They're saying cash settled contracts allow them to square off before physical delivery, and that's the way they want them to enter. Of course, exchanges, commodity exchanges have been pushing for this for a very long time. The SEBI, meanwhile, is weighing very seriously what kind of impact this will have on the retail investor and to protect the retail investor in case of this advanced participation.
Sure, Nimit. Thank you so much for that. In fact, both the exchanges are trading at the day's highest levels. Devin, any view that you have? I know this is a source-based story right now where FPIs probably would be given entry into the commodities market, and both the IEX and MCX are trading at the day's highest levels. Your views?
So in a way, I think it's good to have, those players coming into the markets, largely because of the fact that I think the price discovery and the liquidity management part of the commodity contracts, which probably have much better influence on the global cycle as well. At this point of time, I think their non-participation is possibly preventing the impact of the global cycle into the domestic contract beyond a point. So I think with their entry in, it would be interesting to see whether it will be, a real game changer. But I think welcome, because I think more participation certainly welcome as far as the commodity contracts are concerned. And especially because they've left out the agri-commodity. If at all they will left out, the agri-commodity is going to be a better choice, I think so.
Okay. All right. Let's see how that works. In the meanwhile, let's move to the mobility space. In Delhi Budget 2026 has earmarked 200 crore rupees for the first year of the Delhi EV Policy 2.0 with a scrappage first push. Bigger incentives and more electric buses are on the cards. Rishabh Bhatnagar joining us to give us more details. For various reasons, Rishabh, across the board, and the sun seems to be shining bright, good news for EV. But having said that, various reasons why the EV mobility space in the listed universe is doing particularly well today. Tell us about the latest from Delhi, though.
Absolutely. So what we had today is about a 1 lakh crore rupee budget that the Delhi government put out for the year. Of that, a very small portion just for the first year of this Delhi EV Policy 2.0 is worth about 200 crore rupees. Within that, of course, you have a lot of incentives for first-time EV buyers. Let me list out a few. Number one is that there is going to be 100% road tax exemption for them. There's going to be a registration fee exemption till 2030 for all sorts of electric vehicles. All of your public transportation, right from CNG autos, those will also be phased out. Remember, this is still a draft policy. The full policy is yet to come out. But so far, what we're seeing is that EVs priced up to 30 lakh rupees, those are where the benefits will be capped. So you'll see a lot of these smaller EVs benefit, and also a lot of people who are in the business of making these e-buses and these three-wheeler electric tempos, as well as e-rickshaws. Those are going to be a big hit as far as this Delhi EV policy 2.0 is concerned. So a lot of interesting companies and sectors to be benefited when it comes to Delhi's push for further sort of EV adoption. Currently, EV adoption in Delhi is roughly at about 11 to 13% penetration. The policy 2.0 aims to take it up to 25%. So that's what we're picking up when it comes to this policy.
That's interesting. Thanks so much for getting us those details, Rishabh. Gaurav, I want to come to you on a few of these automotive names, right? And Electra, Green Tech, a couple of other players in the EV space are doing particularly well today. And even the automotive index is bouncing back from the drubbing that it's taken. So would you buy into any of these individual counters?
Alex, as far as pure EV is concerned, Electra would be a preferred choice. But as far as automobile sector is concerned, Hero MotoCorp from the two-wheeler space and M&M from the four-wheeler space. Second would be Eicher and Ashok Leyland in that matter for two-wheelers and four-wheeler space. So these are our preferred bets. I won't be going in completely with Electra because its past performance clearly suggests this is a very volatile stock, and when there are a better areas to park our money with, we would be interested in those, and especially when they are available at corrective rates.
Very quickly, Deven bhai, from the automotive pack just before this entire crisis happened, we were talking about commercial vehicles as the top pick. Is that continuing to be the case for you?
Absolutely no change in the view as far as commercial vehicles concerned. Largely because of the government's effort to bring up the logistic facilities in the country, I think by way of merging the infrastructure under Gati Shakti, is definitely, I think, applaudable, and that's where probably I believe that I think many of the commercial vehicle companies are going to be the real beneficiaries. Of course, EV buses business is going to be, I think, beneficiary to the OEMs like Electra and others, Tata Motors included. But more importantly, some of the ancillary companies could possibly show relatively better approach, I think, because of the government's policy of supplying the incentives on the battery side as well as on the rare earth material side.
Last couple of minutes for the end of trade. But on that note, Gaurav, Deven, thanks so much for taking the time. I clubbed both of your names. Thank you so much for taking the time and talk to you soon. Let's talk about how the markets are doing at the end, right? And let's walk to the wall, Hiral, while we do this.
Clearly, I mean, we've given up the day's highs.
We've given up the day's highs, but it's 440 points and you'll take it. I'm
sure anyone will want to take that.
You'll take it, right? I'm not complaining about this at all. And I would actually take heart from the fact that the broader markets have done better than the benchmark. So the breadth looks particularly healthy towards the end of the session. 2.6% for the mid-cap index, pull up the small-cap index, 2.4%. So here too, you're off the high point of the day, you'll still take it.
You will still take it. And if you see the advanced decline ratio, the breadth has remained absolutely steady. If you just look at the intraday chart, viewers, that will tell you what's happened from a 2040. Absolutely. You did see that little bit of narrowing in between during the day, but again, that's widened and the advances are way outnumbering. This was the reverse in yesterday's session, if you see between the advanced decline ratio.
Double digit exactly. Advances.
And just let's just quickly look at the heat map in terms of Nifty 50 as well, because that also is going to be a pretty picture. There you go. You still have the same names, Power Grid, Coal India, Cipla, Sun Pharma, but apart from this, Indigo, good numbers in terms of gains. L&T, Eternal, Asian Paints, your heavyweights have actually fired today, and that's what is keeping us afloat. You have HDFC Bank also. I'm not able to trace our Reliance Industries because
I was just going to point that out actually.
But in spite of RIL just seeing gains of 0.5%, you're seeing smart moves today.
But it's actually moved down. It's actually moved down to about 0.1% and moved back up to gains of about 0.5%, which is why that bit of a pop towards the end of the session. Otherwise, we would have ended close to 1.7% higher for the benchmark.
And just a quick look in terms of the sectors as well. if you have the sectoral heat map, there you go. It's interesting to see how media has climbed the ladder. You have given up those gains. Where auto was one of the top leading sectors. Bank Nifty as well, seeing some smart moves. Defense has come off slightly, but energy, pharma, healthcare. Sea of green, and I'm sure people are happy with the way markets are closing in today's session. Tomorrow is going to be interesting.
Yeah, particularly because today was Nifty expiry.
Tomorrow is Sensex.
Tomorrow is Sensex expiry, so it promises to be a very exciting midweek. Of course, we have to take into account the fact that Thursday is a market holiday. So I wonder what will take place. Usually, you've seen a fair degree of volatility ahead of market holidays because nobody wants to take extended positions amidst all of this elevated
the turnover
uncertainty.
numbers are going to be very important to watch out for as well, because it seems that your cash market turnover was slightly low today, whereas your F&O turnover was higher, and that's the reason why you've seen that kind of a move in terms of the broader markets as well. And very quickly, if you just see the NSE 500 heat map, or even the gains, there you go. I mean, you've seen gains in the range of 6 to 11%, whereas the top loser in terms of BSE 500 is just seen cuts of 5%. So that tells you what the markets are reading right now.
Yeah, absolutely. So it's a pretty picture, and that is where we will leave you at the end of India Market Close. There's lots more to talk about at the end of today's session, of course, and over the course of this evening. Stay tuned. This is NDTV Profit.
देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real review.
Good evening, you're watching Market Express with me, Shreyanti Singh, and this is the show that gets you up to speed when it comes to headlines, but also the stocks that were buzzing away in trade. But before we do that, a very quick look at the markets. Relief is finally rippling through when you talk about the Lal Street after days of pressure. In fact, you're looking at Nifty finally reclaiming the 22,900 mark. Sensex as well, you're looking at a surge of over 1,500 points. And a broad-based rebound is what you were looking at in today's trading session. When you talk about cues, largely bargain hunting, easing global cues as well when it comes to Middle East tensions. After Trump's commentary and short covering combined to spark today's rally, offering investors a much-needed breather from some of the recent volatility that you've seen. And all sectors end the day in the green with Nifty, media and auto leading the gains. You do have Nifty Bank and Financial Services also adding strong follow-through. Let's also talk to you about some important commentary then. In a parliament address, you do have PM Modi, who said that India is in constant communication with the United States, Iran and Israel, urging all sides to work toward immediate de-escalation amid the ongoing Middle East conflict. He's also noted that several ships right now remain stuck near the Strait of Hormuz, and the government is closely monitoring their status while also coordinating with regional authorities to ensure safe movement through the Strait of Hormuz. Let's go across and listen in.
क्रू मेंबर्स हैं हॉर्मुज़ स्ट्रेट में दुनिया के अनेक जहाज फंसे हैं उनमें बहुत बड़ी संख्या में भारतीय क्रू मेंबर्स हैं ये भी भारत के लिए एक बड़ी चिंता का विषय है युद्ध की शुरुआत के बाद से मैंने पश्चिम एशिया के ज्यादातर देशों के राष्ट्राध्यक्षों के साथ 2 राउंड फोन पर बात की है हम गल्फ के सभी देशों के साथ लगातार संपर्क में हैं हम ईरान इजराइल और अमेरिका के साथ भी संपर्क में हैं हमने डी एस्केलेशन और हॉर्मुज़ स्ट्रेट खोले जाने पर भी उनसे बात की है
Alright, so there you go. That's key commentary coming in from the Prime Minister as well. But as the war in the Middle East enters its 25th day, you do have Iranian media that has reported that Israel-US strikes targeted 2 gas facilities and a pipeline. Only a day after Trump also stepped back from his threat to attack power infrastructure. Trump, in fact, yesterday had announced a 5-day pause on targeting Iran's power plants. However, Tehran denied any official talks. Officials, in fact, said that 6 people were injured after an Iranian missile hit Israel's commercial hub Tel Aviv as well. And you do have police in the city that are saying that they're handling several impact sites of munitions. Israel's military has also said in a post on X or Twitter formerly that its fighter jets had carried out a large wave of strikes in central Tehran yesterday, targeting key command centers, and that also includes facilities associated with the Islamic Revolutionary Guard Corps or IRGC as well. That's the intelligence arm that you're talking about, the Iranian Intelligence Ministry as well. Let's also move on, and according to an official statement, the Israel Defense Forces said that it carried out overnight operations against what it described as Hezbollah-linked sites in different parts of Lebanon as well. And the IDF, in fact, has said that the activity targeted locations it believes are connected to groups operating against Israel, and added also that its actions were aimed at removing threats and also protecting civilians. The statement also reiterates Israel's long-standing accusation that the group operates from civilian areas in the country, something that Beirut-based organizations have previously denied vehemently. Let's also move on, and in progress on the Indian front as well. You do have two Indian LPG carriers, Jagbasant and Pine Gas, carrying over 92,000 million tons of LPG that have transited through the Strait of Hormuz. The vessels have 33 and 27 Indian seafarers on board, respectively. These vessels are destined for India and are likely to reach ports between 26th and 28th March 2026. Let's also move on and get to some other updates as well. Saudi Arabia and the UAE have taken steps that signal closer alignment against Iran in the ongoing conflict. In fact, according to reports, you do have Saudi Arabia that has agreed to grant the US military access to King Fahd Air Base as well. And this is something that marks a reversal from its earlier position against using bases for strikes on Tehran. The UAE has closed an Iranian-owned hospital and club. These actions come after Iranian retaliatory strikes when it comes to energy assets across the region, in fact. And when you talk about the moves, they raise concerns over further escalation and potential impact when it comes to oil supplies. Let's also move on and talk to you about web services that has reported disruption to its Bahrain region as well. And that's Amazon Web Services that you're talking about. You're looking at drone activity amid the ongoing US-Israel-Iran conflict. This marks the second such incident since the war also began. The drone strike caused structural damage, power disruption, and also water damage from fire suppression efforts. AWS, in fact, is actively migrating affected customers' workloads as well to other regions, with a large part already shifted. And the companies confirmed that the impact largely stems from reported drone strikes in the area as well. Moving on, then, Pakistan has positioned itself as a potential mediator between the US and Iran amid the ongoing conflict. Islamabad has offered to host direct talks between US and Iranian officials as early as this week. Pakistan is coordinating with Turkey and Egypt through back-channel diplomacy to really push for dialogue and a possible short ceasefire. Army chief also has discussed peace efforts with US President Trump as well, while Prime Minister of the country has also met Iran's president. Iran has confirmed receiving messages via friendly states, but it says that it responded according to its core positions. Moving on, then, let's talk to you about some of the stocks that also remain in focus. Food delivery platforms are quietly turning the screws on profitability. Swiggy, in fact, has raised its platform fee to 17.58 rupee, matching a similar hike by Zomato as well last week, as both firms look to boost high-margin, predictable revenue. Now, when you talk about the incremental fee flows, that goes straight to the bottom line, in fact, improves take rates. And in terms of what else it does, it also helps fund dark stores. Quick commerce expansion is also something that you're looking at as a result. And what began as a small convenience charge has now become a meaningful monetization lever as well, shared across millions of daily orders. Let's also move on and talk to you about HDFC Bank, that says that its board has appointed both domestic and international law firms to independently review the recent resignation of its part-time chairman and an independent director. The move, in fact, aims to thoroughly examine the circumstances, also reinforce governance standards. When you talk about this particular resignation, that cited really issues of personal ethics, triggered a sharp market reaction as well, with the stock also falling over 10% in 3 days. When you talk about the current market move, though, you did see quite some recovery coming in as far as HDFC Bank is concerned. Moving on, then, let's talk to you about Asian Paints, that is back in pricing mode. Dealer checks are suggesting that the company has taken a sharp 6 to 8% price hike, rolled out largely in two phases, marking a clear shift after a period of muted pricing action as well. The move stands out against recent history, where price increases were limited or even negative in some years, with financial year 27 year-to-date hikes, in fact, already at 6 to 8%. The focus now seems to be shifting on how much of the cost inflation Asian Paints can pass through and what this really spells out when it comes to demand and margins going forward. Moving on then, let's talk to you about Macquarie that has maintained its outperform rating when it comes to Asian Paints. Get you some brokerage check also when it comes to this particular account. A target price of about 3,100 rupees is what you're looking at when it comes to Asian Paints in terms of what Macquarie is saying. In fact, they're also reaffirming its confidence in the industry's pricing strength, noting that the historical pattern of companies taking price hikes to pass on input cost inflation is playing out again. While Macquarie also flags near-term margin headwinds due to rising input costs, it also believes pricing actions should be helping cushion the impact over time and also support earnings resilience. Let's also talk to you about Kalpataru Projects that is in focus after securing close to 4,400 crore worth of new orders in its transmission and distribution business. The wins, in fact, include a 400 kV transmission line project in Africa. You're looking at multiple transmission lines as well in terms of the projects and a substation order in Sweden. Now, this largely strengthens the company's international footprint. The fresh inflows are adding meaningful visibility to the order book and also underscoring their execution strength when it comes to large and complex orders across global markets, and the stock very clearly, as you can see, with that 3.5% uptake cheering that yield. Let's also talk to you about GOCL Corporation that has approved the early monetization of its Yelahanka or Ecopolis land parcel in Bengaluru. The company holds about 38 acres under a joint development agreement with Hinduja Realty Ventures, with the project currently under denotification from the special economic zone status as well. Under the proposed structure, in fact, the entire land and buildings are going to be sold to a leading industrial house in multiple tranches. Let's also talk to you about the total transaction value that is estimated somewhere close to 2,200 crore rupees, with GOCL's share also pegged at somewhere close to 800 crores. The deal, in fact, is expected to close within 6 months, subject to mutual extensions. Let's also talk to you about India's electric mobility push that is set to accelerate, with the government, in fact, planning to deploy close to 10,000 air-conditioned electric buses across urban centers. Now, when you talk about this particular move, it's actually putting JBM Auto and Electra Green Tech in focus, given their strong positioning in the e-bus segment, which is why you had that 5.5% and 4.5% uptick also coming in for both of these counters. The rollout is expected to boost order visibility, support localization, and also strengthen their long-term demand when it comes to electric public transport solutions. Let's also talk to you about Nitco that is in focus after its promoter Vivek Talwar converted share warrants at a premium, triggering a capital infusion to the tune of about 79 crore rupees. When you talk about the board, it's allotted about 1.14 crore shares at an issue price of somewhere close to 92 rupees per share, around 12% above the current market price, with the company also receiving the remaining 75% of the issue value. The promoter stake has risen to 8.82%. In fact, over 1.2 crore warrants are still pending conversion, keeping investor attention firmly on potential future fund inflows as well. Moving on then, let's talk to you about war-led disruptions that are beginning to weigh on corporate outlooks, and see it as one such counter that you should be looking at there. They've flagged, in fact, a potential impact on their first quarter already. They're talking about rising raw material price volatility driven by a weaker rupee and elevated crude prices. That's emerging as a key challenge for manufacturers, and that's something that they had to tell us in the interview earlier as well. For tire makers, crude is a critical input across the raw material basket. Also something that they highlighted, keeping cost pressures firmly in focus. You do have exports that are contributing nearly 19% of CEAT's revenues. Global uncertainty, in fact, according to the word coming in from the management, is adding another layer of risk. Let's also talk to you about Godavari Power and Ispat that has approved plans to set up a 1 million ton per annum steel plant in Raipur, Chhattisgarh, marking a major capacity expansion as well. The project is actually expected to cost somewhere close to 7,000 crore rupees. It's going to be funded through a mix of debt and equity. When you talk about this new facility, it's aimed at strengthening the company's downstream steel presence and also improving value addition, also signaling a long-term growth push despite a volatile macro and commodity environment. Let's also shift focus and talk to you about the word coming in from brokerages yet again, because it's Goldman Sachs that is staying neutral. When it comes to something like an ITC, they're cutting earnings, pointing to rising input costs and only gradual price hikes that are weighing on margins as well. When you talk about the word coming in from UBS, on the other hand, they're keeping their buy call, saying that the company's new pricing strategy, and that is something that includes same price options across key variants, should help protect volumes at this point in time. Now, when you talk about valuations, they're saying that the valuations are in fact looking attractive. UBS is believing that ITC can outperform the more cautious expectations over the next couple of years. Let's also talk to you about Maruti Suzuki approving the first phase of its next capacity expansion in Gujarat. Now, the company is adding nearly 2.5 lakh cars a year, backed by an investment of about 10,000 crore rupees. Let's talk about the move as well that marks the start of its next leg of growth, and that's exactly why it's important to highlight as well. Let's also talk to you about Motilal Oswal initiating coverage, shift the focus right back to brokerages as well, because it's TBO Tech that is in focus with a buy call coming in here. The brokerage, in fact, is saying that the company is a strong structural play in the global B2B travel market, backed by a scalable tech platform. It's set the target price of about 1,400 rupees, arguing also that growth visibility remains solid. Let's also talk to you about Morgan Stanley that has initiated an overweight rating when it comes to something like a Fractal Analytics, assigning a target price of 964 rupees. The brokerage, in fact, is believing that Fractal is well positioned for sustainable above-industry growth as well, viewing it as a strong challenger when it comes to the entire global tech services space as well. Now, in terms of what else they're highlighting, they're talking about how the revenue growth is going to be outpacing some of their peers, supported by robust gross margins that are signaling a high-quality business model as well. And when you talk about their EBIT margins as well, they're currently lagging peers. And you do have the brokerage seeing that this gap seems to be narrowing over the coming years despite trading at a price to earnings premium. You do have Morgan Stanley saying that valuations are justified by the company's growth trajectory. Let's also talk to you about Investec in terms of what they had to say about something like a Sirma SGS as well. That stock was buzzing away in trade. With that 6% gain also coming in, Investec, in fact, is upgrading the counter to a buy rating while raising its target price to 945 rupees. The brokerage is expecting strong earnings momentum, projecting a 30% PAT CAGR between financial year 26 and 28. Now, Investec is also pointing out to a clear improvement. When you talk about the return ratios, ROE is also something that they're highlighting, set to also strengthen on the back of operating leverage and better execution. Now, when you talk about the upgrade, it's reflecting growing confidence when it comes to their profitability profile, but also long-term growth visibility. Let's also talk to you about CLSA maintaining an outperform rating on ONGC while hiking the target price to somewhere close to 400 rupees. The brokerage is seeing reduced risk around windfall taxes as a key positive. Now, they're saying that this is easing one of the major overhangs when it comes to the stock, also pointing out to new production triggers and ramp-ups as additional upside drivers. In fact, they've also flagged policy uncertainties that are moderating right now. Output growth also something that they've highlighted as getting better. CLSA is believing that ONGC is well positioned to benefit from a more supportive earnings environment. Moving on, then, let's get you the word coming in from sources. In fact, sources are telling NDTV Profit that SEBI is considering opening the commodity derivatives market to foreign portfolio investors. The Commodity Derivatives Advisory Committee in fact, is examining ways to boost participation, starting with cash-settled non-agricultural contracts. Now, metals, energy, and bullion segments are seen as suitable for FPIs in the first phase. Cash-settled contracts are also preferred as physical delivery is viewed as operationally difficult when it comes to overseas investors because it comes with its own cost. Now, the move aims to deepen market volumes as well as liquidity. SEBI is going to be later considering or mulling allowing FPIs in agricultural commodities once the safeguards are in place to protect retail investors. Let's also move on and get you some business news now. Rajasthan Royals has been sold to a US-based consortium led by entrepreneur Karl Somani as well for $1.63 billion. When you talk about this particular consortium that includes our Rob Walton as well, and you're talking about the deal that has been signed with a formal announcement that is expected later today as well. Closing and full takeover will happen only after the 2026 IPL season. When you talk about the current owner, you do have Manoj Badle, who's going to be continuing to manage the team during the upcoming season. The transaction values the franchise at a record level and reflects the growing commercial appeal of IPL teams. Moving on, then, Indian Railways has revised cancellation and refund rules when it comes to train tickets to curb touting and improve efficiency as well. So you're looking at passengers that can now change their boarding point up to 30 minutes before departure. When you talk about cancellations, you're looking at more than 72 hours prior, only a flat minimum charge applies. Between 72 and 24 hours, 25% of the fare is deducted, and between 24 and 8 hours, 50% refund is given. No refund, in fact, is allowed for cancellations less than 8 hours before the departure. But the changes are going to be implemented in phases from April 1st to April 15th. And you do have Minister Ashwini Vaishnav also saying that the move targets patterns where touts book and cancel tickets for refunds as well. Moving on, then, Indian Railways has revised kilometrage allowance and allowance in lieu of kilometrage for its running staff. Let's talk about the revisions. The revised rates will apply retroactively from January 1st, 2024. The upward revision of around 25% was triggered after dearness allowance crossed 50%. Now, it benefits over 2 lakh employees, including loco pilots, assistants, loco pilots, firemen, and guards as well. Now, the changes, when you talk about them, they apply to both loco running staff and also traffic running staff across all zones and production units. Other conditions for these allowances remain unchanged at this point in time. The move provides relief to operational staff ahead of the 8th pay commission. Moving on to some national news now. The Union Health Ministry has tightened its grip on the booming weight loss drug market. In a fresh notice issued on March 24th, you do have the authorities saying that the Drugs Controller of India has intensified surveillance to crack down on the unauthorized sale as well as promotion of GLP-1 weight loss drugs. Now, this is something that is following an earlier advisory banning surrogate and indirect advertising as well to curb misuse and off-label consumption. You're talking about multiple generic versions here that are now entering the market, so regulators are increasingly concerned about drugs being sold through retail stores, online platforms, as well as wellness clinics. And when you talk about enforcement as well, that has since ramped up with audits and inspections across 49 entities as officials really move to tighten their grip when it comes to the entire pharma supply chain. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics Vanakkam Tamil Nadu. Here we come. Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist,
Hi, I'm Tamanna Inamdar. Watch me on NDTV.
Market stages a sharp recovery today after Trump said that he will pause strikes on Iran's energy infra for 5 days. Nifty reclaims 23,000 while Sensex gains over 1,300 points. Mid and small cap indices outperform the benchmarks. All sectors finish higher. Crude climbs above $100 per barrel as optimism de-escalation of the Middle East war fade. Rupee closes at 93.88 versus a dollar after logging sharpest gain in 11 sessions after the oil relief. Iran denies any contact between Tehran and Washington, calls Trump and Netanyahu perpetual liars. Iran ready but on tough terms. Middle East war continues despite Trump's pause claim. Iran carries out fresh wave of attacks on Israel. Israel retaliates as Iran mounts attacks on Gulf. US consulate in Iraq attacked along with Amazon's office in Bahrain. Prime Minister Narendra Modi assures energy security in the country, says India is in touch with the US, Israel and Iran for de-escalation of the Middle East war. Meanwhile, the government will conduct an all-party meeting on the 25th of March. Government revises the FY27 fiscal deficit target upwards to 4.5% of the GDP as per the new base series. This is higher than the 4.3% target set in the budget 2026. Government tightens regulatory surveillance over the supply of weight loss drug GLP-1 after concerns around it on demand availability at retail pharmacies and online platforms emerged. Online food delivery is set to get expensive after Zomato. Swiggy hikes the platform fee to 17 rupees 58 paise from 14.99, move aimed at boosting margin revenue and fund the dark store expansion. Government revises cancellation rules for confirmed tickets, updates the norms on penalties based the time left for cancellation, also brings a new window to change the boarding stations. Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar. Let's take it straight to the day's market action, which is the most exciting bit today. Both the benchmark indices closed around 2% higher after markets recouped Monday's losses. All the sectoral indices closed higher with Nifty Media as the best performing sector, while the broader markets outperformed the benchmarks today. So mid-caps really saw buying coming in. Indigo and L&T are the top Nifty gainers as both gained over 5% in trade today. Let's hear out veteran investor Porenju Veliath, who believes that the current market is not for the broad optimism, but for careful stock selection. He also says that the easy gains seen during the COVID liquidity boom are behind us, and that the investors need to be far more selective now. Here's why he thinks it's time to cherry pick, not chase the market. Listen in.
This bearish trend in the broader market started 1.5 years ago. at least 6-7 quarters ago. Of course, it got into a much bigger market crash along with this geopolitical event. So I believe this is a lesser kind of an opportunity, but those who do bargain hunting or cherry picking of stocks, this is an excellent opportunity. I'm not extremely bullish, or I don't see extreme value in the market in total.
All right, so that was this market commentary really coming in. Now let's focus on the money market also. The rupee holding weak, hovering around the record low levels near the 94 per dollar mark. Pressure really continues from elevated crude prices and also persistent FII outflows. While a stronger dollar globally is really adding to the strain, any recovery remains capped despite the intermittent RBI support, keeping the currency volatile near historic lows. However, it did perform better than yesterday's trade, also because of crude really doing better. So let's talk about crude, which has been playing truant in both our equity markets as well as the money market, both getting impacted because of crude oil prices. So oil is surging once again. Brent is back above $100 per barrel, while WTI holds near $90 per barrel. Now, the spike really comes as Middle East tensions really flare up, with Iran denying any ceasefire talks while keeping supply risks around the Strait of Hormuz firmly in focus. Now, with crude back at elevated levels, well, the key question, what does this really mean for India's growth outlook? Let's listen to an exclusive conversation where Geeta Gopinath shares her take on the impact on India's GDP of this particular situation. Listen in.
If oil were to average, say, only $85 for the rest of the year, that would be shaving off about half percentage point from growth for India. If oil were to average closer to, say, $100 a year, then we're talking about almost 1 percentage point of growth being impacted. And so it's already consequential. The effect on inflation, of course, depends a lot in terms of how much the government is going to absorb in terms of the fuel subsidy itself versus letting that pass through and show up at the pump. As of now, pump prices haven't gone up in India. Most of the shock is being absorbed by the oil market companies, but I don't think that can be held up for a very long time. If oil stays at the prices it is for a few more weeks, we should start seeing prices go up at the pump even here in India.
All right, that was Geeta Gopinath talking to us about the impact of crude oil prices on the Indian GDP. Now, it's day 25 of the Middle East war, remember, and after weeks of intense strikes, counter-strikes, ultimatums and denials, well, a new twist really emerged yesterday, a possible signal of truce from US President Donald Trump. Now, almost instantly, remember, Iran had slammed the brakes on that particular narrative, and Iran denied any contact between Tehran and Washington and said that Trump and Netanyahu are perpetual liars. Well, Israeli Prime Minister Benjamin Netanyahu said that the US president believes that there is now a chance for US forces to lock in a deal with Tehran. So where does that really leave us? A US president talking up diplomacy, and Iranian leadership rejecting it outright, and an Israeli prime minister signaling that any ceasefire or agreement must reinforce Israel's strategic goals. Let's listen in to what did Donald Trump and Netanyahu say on this particular matter.
Well, we've had very strong talks. Mr. Witkoff and Mr. Kushner had them. They went, I would say, perfectly. I would say that if they carry through with that, it'll end that problem, that conflict.
מוקדם יותר היום שוחחתי עם ידידנו הנשיא טראמפ. הנשיא טראמפ מאמין שיש סיכוי למנף את ההישגים הכבירים של צה"ל וצבא ארצות הברית כדי לממש את יעדי המלחמה בהסכם. הסכם שישמור על האינטרסים החיוניים שלנו. במקביל, אנחנו ממשיכים לתקוף גם באיראן וגם בלבנון. אנחנו קודשים את תוכנית הטילים ותוכנית הגרעין עד דק וממשיכים לפגוע קשות בחיזבאללה. רק לפני ימים אחדים חיסלנו עוד 2 מדעני גרעין והיד עוד נטויה. אנחנו נשמור על האינטרסים החיוניים שלנו בכל מצב.
All right, more on that war situation despite Trump's declaration for 5-day pause on any strikes in the power infrastructure of Iran. Well, the escalation really continues in the Middle East and other areas. So Iran has really launched multiple targets across Tel Aviv. Iran has also attacked US consulate in Iraq's Erbil, whereas Israeli forces targeted Al-Amanah gas station and also a petrol station in Al-Rashidiyah. Now, South Lebanon, Israel also launched multiple overnight strikes on Hezbollah targets in Beirut. Iranian media says that energy infrastructure in the country were attacked. Remember, this is one important aspect. And Iran claimed that US-Israeli strikes have targeted 2 gas facilities and a pipeline. Iranian drone also hit US tech giant Amazon Web Services in Bahrain. All this comes after Trump has announced a pause for 5 days on war, claiming that Tehran is now open to a deal. So that particular negotiation needs to be watched out very, very closely. But addressing the escalating West Asia crisis in the Rajya Sabha, well, Prime Minister Narendra Modi said that India is actively working diplomatic channels to ease tensions with direct outreach to the United States, Iran, Israel, and key Gulf nations. Here's what he said in the parliament today.
हॉर्मुज़ स्ट्रेट में दुनिया के अनेक जहाज फंसे हैं। उनमें बहुत बड़ी संख्या में भारतीय क्रू मेंबर्स हैं। ये भी भारत के लिए एक बड़ी चिंता का विषय है। युद्ध की शुरुआत के बाद से मैंने पश्चिम एशिया के ज्यादातर देशों के राष्ट्राध्यक्षों के साथ 2 राउंड फोन पर बात की है। हम गल्फ के सभी देशों के साथ लगातार संपर्क में हैं। हम ईरान, इजराइल और अमेरिका के साथ भी संपर्क में हैं। हमने डी एस्केलेशन और हॉर्मुज़ स्ट्रेट खोले जाने पर भी उनसे बात की है।
All right, let's also take it across to the updates coming in from the government. It's the government's press briefing, and let's take it across to that.
Good afternoon, everyone. गल्फ क्षेत्र में मौजूद सारे भारतीय जहाज और सारे भारतीय नाविक सुरक्षित हैं। पिछले 24 घंटे में कोई भी समुद्री घटना दर्ज नहीं हुई है। कल देर शाम 2 भारतीय फ्लैग वाले एलपीजी कैरियर्स पाइन गैस और जग वसंत, इन 2 लोडेड हैं, एलपीजी लोडेड हैं इन दोनों पे। इन दोनों जहाज़ों ने सेफली स्ट्रेट ऑफ हॉर्मुज को पार किया और ये भारत की तरफ अग्रसर हैं। पाइन गैस में 45,000 मीट्रिक टन एलपीजी है और वो न्यू मैंगलोर पोर्ट पे अराइवल उसका ड्यू है और वो अराइवल 27 मार्च को संभावित है, 27 मार्च की प्रातः संभावित है। वहीं दूसरी एलपीजी कैरियर वेसल जग वसंत है, जिसमें करीब 47,600 मीट्रिक टन एलपीजी है और वो कांडला की ओर जा रहा है। उसका नेक्स्ट पोर्ट ऑफ कॉल कांडला होगा और उसकी अनुमानित आगमन तिथि 26 मार्च है। इस प्रकार इन दोनों जहाज़ों के पर्शियन गल्फ से निकलने के कारण अब पर्शियन गल्फ जो वेस्ट ऑफ हॉर्मुज है वहाँ पे 20 भारतीय फ्लैग के जहाज रह गए और उसमें 540 भारतीय नाविक हैं और इन सभी की सुरक्षा, उनकी देखरेख और समन्वय के लिए डीजी शिपिंग, आरपीएसएल एजेंसीज और हमारे मिशंस के साथ लगातार समन्वय बनाए हुए हैं। पिछले 24 घंटों में डीजी कंट्रोल रूम में 146 कॉल्स, 226 ईमेल्स प्राप्त हुए हैं जिनका रिस्पांस किया गया है। वहीं पिछले 24 घंटों में 26 भारतीय नाविकों को गल्फ एरिया से, डिफरेंट लोकेशन से, एयरपोर्ट से भारत वापस रिपैट्रिएट किया गया विद द हेल्प ऑफ द इंडियन मिशंस इन दोज कंट्रीज। मैंने ये पहले भी बताया था, सारे पोर्ट्स, मेजर और अदर देन मेजर पोर्ट्स स्टेट मैरीटाइम बोर्ड्स के साथ हमने कोऑर्डिनेशन किया है। किसी भी पोर्ट पे किसी भी प्रकार का कंजेशन रिपोर्टेड नहीं है और जो पोर्ट्स ने बहुत सारी फैसिलिटीज़ अपने स्तर पे एडवाइजरी के बेसिस पे अपने स्तर पे कार्गो ओनर्स को या स्टेक होल्डर्स को दिया है। इसी क्रम में मैं आज एक पोर्ट कामराजार पोर्ट लिमिटेड के विषय में बता रहा हूँ। यहाँ पे जो कार वहाँ से एक्सपोर्ट होती हैं, कार लोड होती हैं और जनरली गल्फ एरिया में जाती है। वहाँ पे कार का जो वेटिंग पीरियड है, पार्किंग पीरियड, जो पहले 20 दिन का फ्री पीरियड होता था उसको अब 40 दिन कर दिया है वेटिंग पीरियड, फ्री ऑफ चार्ज। और उसके साथ साथ 10 एकड़ का एडिशनल स्टोरेज स्पेस भी वहाँ पे क्रिएट किया है जिससे कि कार्गो का मैनेजमेंट और इफिशिएंट हो सके। इस प्रकार मंत्रालय सारे शिपिंग के मूवमेंट का, कार्गो के मूवमेंट का, हमारे शिपिंग के मूवमेंट का, हमारे पोर्ट के ऑपरेशंस का, नाविकों के संदर्भ में हम लगातार इस पे निगरानी रखे हुए हैं और हमारा ये प्रयत्न है कि सभी सेफ रहें और मैरीटाइम ट्रेड सुचारू रूप से कंटिन्यू करता रहे। धन्यवाद।
Thank you, sir. Now I would like to request Shri Randhir Jaiswal, Additional Secretary XP, Ministry of External Affairs, to brief you from the perspective of External Affairs. Over to you.
Thank you, ma'am. From our side, we have certain things to update you. As you may have seen, External Affairs Minister, yesterday he spoke with the US Secretary of State. The two leaders discussed the situation in West Asia and its impact on international economy with particular focus on energy security concerns. External Affairs Minister also spoke with his counterpart, His Excellency Vijitha Herat, the Foreign Minister of Sri Lanka. There again, both leaders discussed the repercussions of this ongoing conflict. External Affairs Minister reaffirmed India's commitment to neighborhood first and Vision Mahasagar. Separately, External Affairs Minister met with all GCC ambassadors here in Delhi yesterday. There again, he exchanged views on the ongoing conflict in West Asia and thanked each one of them for their continued support to the Indian community in the region. As you know, we have a large Indian community in all these countries. That is all I have to say. Thank you.
Thank you, Ranveer ji. अब मैं मिनिस्ट्री ऑफ एक्सटर्नल अफेयर्स के एडिशन
All right, so that was the update given by the government. Remember, the Prime Minister also today said that they have been working on diplomatic channels, in touch with the warring parties to really de-escalate the matter. Now, remember the war impact and the impact on various sectors. Let's focus on that. Fears of a global helium supply disruption are rising after gas facilities in Qatar, one of the world's key suppliers, were hit and escalating tensions in West Asia happened. So the development has really sparked concerns about the shortages and also higher prices, especially, remember, for the sectors that rely heavily on the helium production, and that is used as a raw material. So which are those sectors and which are those companies which stand to get impacted because of the shortage of helium? Our colleague Varsha is right here with a detailed research analysis of that. Varsha.
Everyone is suddenly now talking about the helium. Now, if you see, Iran's military strike have hit Qatar's gas facilities, and these facilities also produce helium, and this has raised fears when it comes to global helium supply shock. Now, why helium matters? You know, this is beyond helium is used beyond balloons, I would say, is used in semiconductors, in MRI machines and rockets, cannot be easily replaced though, and short supply can hurt critical industries. Talking about the supply impact, you know, exports have cut by 14%, prices have already doubled, and shortage likely in coming weeks. Talking about the impact on industry when it comes to semiconductor, chips need helium for cooling during manufacturing, no real substitute available here. Onto the healthcare freeze industries, if I were to talk about, helium cools magnets in MRI machines. No heliums means no scans. And talking about the impact on Indian companies, the negative impact would be on electronic manufacturing companies like Dixon Tech and Keynes Tech. Also the healthcare giants like all the hospitals, the diagnostic companies. Overall, the healthcare industries will actually impact, because rely on supply of liquid helium to keep MRI machines operational is one of the impact that these companies will face, and global shortage will lead to higher maintenance refill costs. But one company which will have a positive impact is ONGC, wherein they're exploring helium extraction from natural gas, and the global shortage increases strategic value of domestic helium. So overall, a small gas but a huge impact on the overall healthcare and semiconductor industry.
Thanks so much, Pavasha, for putting all that into perspective. In fact, we do have the management of a healthcare company. Kim's Hospitals management did join us and explained why the hospitals are not facing any helium shortage from MRI services at this particular moment. Listen in.
So usually the MRI, once we fill that will go for quite a long period of time. So we are full of all the MRIs what we have. The helium is no shortage. So there will not be any effect too, unless we see if the conflict continues to prolong for a long period of time. Then we'll see. As on today, maybe we have a sufficient helium. This is once in 6 months like that we'll be able to change the helium.
All right, in one other significant development, well, the government is tightening the screws on the booming weight loss drug market that is sprawling in the country. The Union Health Minister has stepped up the surveillance on GLP-1 drugs and rising concerns over their unchecked sale as well as misuse. With multiple generic versions now flooding the Indian markets, these drugs, remember, are increasingly being sold through pharmacies, online platforms, and even wellness clinics, often without proper prescriptions. Now, the Drugs Controller has conducted inspections across 49 entities nationwide, flagging unauthorized sales, poor prescription practices, and even misleading promotions. Now, the message is clear. These drugs are not over-the-counter solutions. They must be taken strictly under specialist supervision, with strict action promised against the violators. So this is one important development that is really coming in. But another corporate development today, and which affects all of us equally, we are talking about the food delivery and the quick commerce companies. So Swiggy has bumped up its platform fee again, now at 17 rupees 58 paisa, matching the Zomato's latest hike that we had seen. It's a steady climb that really boosts the high margin revenue for the food delivery players and fuels their expansion plans from dark stores to better take rates. But it's also, remember, the war situation, its impact, and the upcoming headwinds that they are also bracing up for. Mahima, my colleague, joins in with the latest.
Swiggy has kind of followed the price hikes that Zomato had taken last week. So now the platform fees is being hiked to that 17.58 rupees from 15 rupees earlier. This also is inclusive of GST. Keep that in mind. Recently, Zomato also similarly hiked its platform fee from 14.75 to 17.58. Now, if you take a look at the history of how these price hikes have been taken since August 2024, from 4 rupees to now almost 17.58 inclusive of GST. GST, of course, was announced in September 2025. Since then, 18% GST is applicable on platform fees. So since then, we've seen a significant amount of hikes in these platform fee. Now, as you rightly mentioned, overall this directly contributes to the bottom line for all of these food delivery platforms. It's of course one of the sources of boosting the high margin revenue for both Eternal as well as Swiggy. Directly contributes to the bottom line and will also kind of lead to better profits, and that could help fund their dark store expansion and also increase take rates for the following quarter as well. So this is the overall view of what this hikes mean, and that is why we're seeing both of these counters reacting positively to that news flow.
All right, thanks so much, Mahima, for getting us all those important details which affects all of us on a daily basis. Now, big reforms coming in from the Indian Railways as well, spanning freight construction, execution and even passenger convenience. From new wagon designs and tighter contractor norms to stricter cancellation rules and more flexible ticket changes. Now, this is a wide-ranging overhaul really aimed at improving the efficiency as well as the user experience. Let's take it across to my colleague Danish for more details on these sweeping changes in the Indian Railways. Danish.
Well, the Ministry of Railways today released a set of reforms for the sector. One of the major reforms that the Ministry today unveiled was on ticket cancellation charges. Now, if you're cancelling your train ticket 72 hours prior to the departure, then you are not liable to pay any major amount as far as ticket cancellation charges are concerned. It will be a very minuscule amount. But if you're cancelling your ticket in the time frame of 70 to 48 hours, in this particular case, you are liable to pay 25% as penalty for cancelling your ticket. And in cases between 8 to 24 hours, this will go up to 50%. And if you're cancelling your ticket just 8 hours before the departure of the train, then you will not be able to get any kind of a refund. On the other hand, the ministry has also now empowered passengers that if they're buying a ticket from a counter, then they can go to any particular counter and they can get that ticket cancelled. Besides that, for e-mobile tickets, you will be able to get the refund in a very short duration. Besides this, as far as contracting of future projects is concerned, the ministry has come out with new rules, and it has, as far as subcontracting is concerned, the government has now allowed these contractors to give only 40% of subcontracting work. Earlier, we were seeing that the people used to, subcontract a lot of work, but now the government wants to really bring a pause to this practice, and hence this has been unveiled by the ministry. Besides this, as far as another major passenger reform is concerned, if you want to change your class of travel, now you will be able to do that 30 minutes before the departure of your train. Before this, the rule was that you could only do it until the chart was not prepared. So these were the set of reforms that the ministry has unveiled today. Today, 4 major reforms has been announced, and in the upcoming few days, it is expected that the government will roll out such more reforms so that India's railway sector can do a quick turnaround and it can become one of the best world-class railway infrastructure in the entire world.
All right, thanks Danish for that, and more on transportation. Well, Road Transport Minister Nitin Gadkari has proposed to discontinue the cash payments at all national highway fee plazas from 1st of April 2026. Listen in.
और 1 अप्रैल से अभी हमने निर्णय लिया है कि अभी इसके बाद कैश ट्रांजैक्शन ही टोल पर बंद कर दिया। जो कुछ कमियां थी, गड़बड़ी करने के जहाँ अवसर थे, वो सब निकाल दिए हैं। अब आपको कोई भी कार्ड आप देकर तुरंत पैसे पेमेंट करोगे और उसके साथ कहीं रुकने की ज़रूरत नहीं। ऑटोमेटिक सिस्टम के द्वारा ये सब होगा और ऑपरेशन और मेंटेनेंस कॉस्ट भी इसके कारण कम आएगी।
All right, with that, it's time to wrap Profit 360, but keep it with NDTV Profit for all the news and views of the day. Thank you so much for tuning in.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come. win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and I have got you a very interesting company. But before that, let me give you some hints. Try to guess which company I'm talking about. The company is world's second largest manufacturer of polyester yarn. Correct. That's the first hint for you. The second hint, it's undergoing a very large expansion in the state of Punjab. We know Gujarat is a big textile hub, so is Punjab. Interesting. The third hint, let's talk about that. The stock is down 34% from 2025 highs. Remember, the stock was listed in 2024 end as well, so the history is relatively small when we get this company in KYC. So let's tell you which company we are talking about, and the company is an upstream player in the textile space and it's going across various segments and expanding as well. The company's focus is Sanatan Textiles. This is the company which we'll talk about. But the question remains is, why are we calling this companies? A lot of tailwinds are happening in the sector and the industry also. So let's see what are the key questions which needs to be asked for the company, why this has come to my interest. The first one is the yarn spreads. They are improving in the current inflationary scenario which we are seeing in the textile industry. The spreads are improving, some price hikes have been taken, and for an upstream player this augurs well. And also there is some government benefits also coming in. Any kind of pressure is there in the polyester business because there is a crude derivative at play as well. Company has a significant chunk of business coming from there. So we'll understand the pricing trends, how things are falling. Also, the third important question why we are getting Sanatan Textiles is of course going to be on how the growth comes and the overall momentum comes. And on the show we'll have Sameer Dattani. He is the ED of Sanatan Textiles, where we'll understand what are the key queries going ahead as well. Also, what are the pricing tailwinds looking like? This is another important question we will be asking. And let's move on to the other important question, which is the expansion plans. What are the timelines looking like, especially for the Punjab segment? There's also the Madhya Pradesh angle for growth as well. Revenue and PAT guidance, likely this post-expansion completion. We'll talk about the FY28 or FY30 numbers. And importantly, this segment as well, Madhya Pradesh, what are the expansion plans and currently what the progress has been. So the company wants to become a pan-India player and they have significant presence in the textile hubs. Debt reduction, because they are expanding, the debt levels are on the higher side. When will they reduce it or will it continue? That's also something we'll be asking. And overall the margin profile, how will it change for the company? You know, it's not a commodity play, and I'll try to explain you why. This is of course because of the products and also the company moving towards technical textiles as well. So this profile will change. So these are the key reasons why we want to call Sanatan Textiles in KYC. But let me give you some more flavor about the company. Company karti kya hai? Layer pe layer hai. So I'll try to take it out for you. It manufactures and exports polyester, cotton and technical textiles. Now let's go much more deeper into it. What does this actually mean? The company has an installed capacity of almost 480,000 million tons per annum, and that is where the street is bullish on the company actually increasing the overall capacity expansion plans as well. They offer 3,200 active yarn varieties with 50,000 SKUs. That is a large variety, and because of that they have plethora of customers. Also, apart from this, let's talk about the core segment. सबसे बड़ा धंधा यहाँ से आता है, polyester filament yarn. And this is of course used in the sportswear, innerwear, in our everyday wear as well. And they have a higher longevity as well, क्योंकि ये carbon से बनता है. Polyester installed capacity is around 456,000 million tons per annum. And this, after this primary product, there are other key products also which you should be focusing on. And the revenue contribution, very much important. 77% of the revenue comes from the polyester segment. This is the segment I'm talking about. This is the cotton yarn segment, and they have a special quality of cotton yarn segment. and some benefits are coming because of the yarn spreads going up and the government also putting some anti-dumping duty recently. So this augurs well for this place as well. But the question is the industrial yarn, the defense textiles. These are the segment which is upcoming. The company has a moat in that, and interestingly, it's a high margin business as well. But outlook, what is the outlook? The consolidated EBITDA expected to require almost 90 to 100 odd crore rupees. This is the outlook for the Q4 FY26 and FY27. So these numbers will be coming in some days. The consolidated revenue at 1200 crore rupees. And moving ahead, if you look at the key numbers, they expect this improvement in spreads in the month of January, and the expansion would be there where the focus would be there on the counter. Apart from this, also the revenue is close to 5,700 crore for FY27. It's likely to go on the higher side as well as we speak. And look at the clients, across the textile value chain. What you see at the back end is something which the company does. That's why it's called an upstream textile player. Raymond, Welspun India, Page Industries, D-Decor, Wildcraft. You see these entire fabrics, they have different use cases also. And that is why there is some kind of a premium valuation attached to this company. But of course, Q3 numbers were impacted. There was a temporary margin pressure from the new BIS norms, which the company had mentioned in the Q3 con call and the press release. And a brief inventory buildup was there because of the GST rate transition coming in from 12% to 5%. So inventory changes hua और PAT में भी आपको impact देखने मिला. So this is the Q3 numbers impact coming in, but the most important thing which the street is looking for is the capacity expansion. Silvassa, the current stage, it's around 2,000, you could say almost 2 lakh plus MTPA, and Punjab, there are two phases of growth coming in. The first is already in focus, almost 4,56,000 million tons per annum, and then if you grow that, this adds up to almost 5,47,500 million tons per annum. So this is where the expansion story is playing out. And let's look at Silvassa's capacity expansion. This is going to be almost double. That's the plan coming in, which they already have a big presence in the state of Gujarat, and now they take this entire concept into the state of Punjab. Let's see what's there for Punjab, the capacity expansion. And if you look at that, that is also showing almost double of that capacity expansion as well. And it's likely one of the few larger players who are making their way into this new geography, and that is where street bullishness comes in. But let me talk about the rating parameters, that how we judge a company in KYC. Of course, we talk about the income statement, balance sheet, and the cash flow. These are the basic three holy numbers in financial analysis. Then we understand the return ratios. Are the return ratios suppressed? And generally for an upstream textile company, the return ratios are on the lower side. That's the business model. But company is expanding, so there might be a bit pressure on that. Shareholding is just, you could say, 1.5 years of total data coming in for both of this. So we'll definitely understand how things have moved. Street cred is kitna paisa bana, kitna paisa nahi bana. And the valuations, largely we'll compare it with one company that is called Philatex Fashion, because it's almost apple to apple comparison, because 77% of the revenue comes from this polyester segment. Outlook is something which the street is looking out for, and I'll explain you what can be an inflection points factors for this company. Let's talk about the income statement and see how things are panning out. And income statement, little bit of concern is there. It's largely slight dip has been coming in when it comes to the revenue. Just look at the numbers, how it's panning out. Look at the margins also. The margins is a single digit play, but a slight up move has come in. 8 to 9% is something which the company is having current margins, and if they move towards the value added segment, we can get something at 10 to 11%. But don't expect a very big one, because the model is only as such, because it's an upstream textile player. Q3 numbers also were on the weaker side. I had mentioned you what was the reason for it. There was a labor wage impact also, there was an inventory issues, and BIS impact also was there in Q3. And the management sounded positive when it comes to the fourth quarter, as these items which hit the bottom line numbers might not come. And looking at the margin trajectory, that is where the concern comes in. So largely it's a very stable business, nothing much to look, but Q3 was impacted, and this was throughout the industry. So definitely all the industry numbers were on the lower side for the upstream textile players. So net for the numbers, it's a thumbs down when it comes to the income statement. But let's look at the balance sheet, and of course the balance sheet, the overall equity setup and the reserves are very strong. It's around 1700 crores of reserves is there. That's a good point. and the company has been able to max their balance sheet numbers in a decent manner. But a little bit of concern for me is definitely going to be on your borrowings front. That has gone up. If you could just show the borrowings also and show you how things have moved. There's a cash bank balance is also on a higher side, so that is decent. Remember, it's a very high working capital business as well. 1,084 crores of this number is there. So the debt reduction is something which we'll be talking about, but cash balance is decent. So net, it's a neutral rating when it comes to the balance sheet. But apart from the income statement, balance sheet, let's talk about the cash flow. And remember, there is a slight lumpiness in this kind of a business model. We're just trying to show how things have moved around, and company has done well in FY25. Look at the conversion. It has been decent for a company which is an upstream textile player. They have done well on that. So net, the cash flow management has been good. And I'll give a strong thumbs up when it comes to the overall segment. But return ratio, a little bit of concern is there. It has been falling. 17% was there in FY23, in FY24 it was 14%, and a slight dip coming in FY25 as well. But this is the inherent model I had mentioned you earlier, so you don't expect that much when it comes to an upstream textile player, but company will have something under the sleeve, and I'll explain you that in some time. So it's a thumbs down when it comes to the return ratios. Let's talk about the shareholding, how things have panned out, and largely the promoter stake is solid. It's at around 79%. And if you see DIs, FIs, publics, largely it's been unchanged. What I like about it is there's a slight increase coming in the DI participation in the fourth quarter numbers. So we'll definitely see something different in the March numbers as well. So it's a thumbs up when it comes to the shareholding. But street cred, kitna kamai hua? That's the biggest question to ask. Last 1 year, remember, it's a bad market for small and mid caps. Despite that, company is in the positive. Year to date, it's down 16%, and the peak which was there in 2025, it's down 34%. But interestingly, from the IPO price, the company is still up 14%. So let's give it a little bit more time. I'll give this a neutral rating when it comes to the street cred. Valuations is very much important, and Philatex is the nearest peer I would like to compare with that with. And remember, largely the valuations are corrected almost 40 to 50% from the peak levels, and Philatex also the story remains the same. But definitely company has a premium value, and the market and the experts say that they will continue holding that premium. Why is that company holding the premium? That's the question we'll ask the management. Overall, the valuations are still very much attractive, so I'll give a thumbs up for this. But outlook, this is the most important thing, and if you are noting it down, do that or take a screenshot, and it'll be important for that. The company's first outlook is its fully phased one capacity at Punjab facility. It will be operational by the fourth quarter of FY27, and it's also a beneficiary of consolidation in the industry as well. What I spoke with the industry is only 7-8 big players are there, so definitely company will benefit from that. They're expecting larger orders, especially in the polyester and the textile segment as well. So expect some favorable announcements in the future, and companies moving towards the high margin products as well. It'll be pretty much interesting to understand what are these key products and where the company's focus is going on. And largely the operational PAT is expected to normalize in the fourth quarter. We saw a lot of aberrations in the third quarter, which I had mentioned you. So we'll see whether the turnaround happens or not in the fourth quarter. So net for outlook, it's a strong thumbs up. But let me revise you the entire KYC ratings for Sanatan Textiles, and largely we see income statement and return ratios do have some concern, but the cash flow management and balance sheet is good. And looking at how the street cred or the shareholding pattern moves, that is on the positive side as well. What I really liked is the valuations, which are attractive, and the outlook is something which is strong as well. And overall, the total rating I have given it is almost 5 out of 8. It's largely in line or slightly higher to the numbers which I generally give for the companies in KYC. But to get in more perspective, we will be joined in by Sameer Dattani. He's the director at Sanatan Textiles. He has more than 15 years experience in the textile industry as well, and he's of course leading an important segment in the yarn segment, and this is the fully drawn yarn business. But to understand the entire business, we are joined in by Sameer Dattani. He's the director at Sanatan Textiles, and we're pretty much interesting to get him in and to get more details as well. Sameer, welcome to our show. It's always a pleasure to be here.
Hi, Sharat. Thank you.
Yes,
Thank you for having me.
Sameer. Yeah. So, Sameer, the first question is, textile industries is very difficult to understand even for our common viewers and even for me. Just to explain us, what does your company do? आपकी company करती क्या है, क्या product है, और कहाँ पे use होता है?
So at Sanatan Textiles, we make yarns, and the textile industry is quite large. The whole value chain is very long. But the interesting thing about what we do, that we make yarns and we make all these different types of yarn, is that we are sector agnostic. मतलब हम अलग-अलग types के yarn बनाते हैं.
और ये पूरे sector agnostic मतलब कहीं पे भी apply कर सकते हैं.
We have different products for automotive application, different products for home textile, different products for apparel and garments, athleisure, activewear, sportswear, luggage. Even the fabric you see on hoardings and advertisement billboards, they use our yarns. They're called flex fabrics. आज construction में हमारे technical textile yarns जा रहे हैं. Defense textiles में अभी application just शुरू हुआ है.
So ये polyester में आता है.
ये polyester में आता है, and cotton it goes into our in cotton we have a very focused product basket. So it's mainly going into shirtings, bed sheets, innerwear, because we make 100% combed compact cotton yarns, the finer counts. We don't make the coarser counts. We have a very niche product basket in our cotton yarns.
So we call them GSM and those threads.
So it's finer basically, and it's compact yarns. Compact yarns are more superior sort of yarns used for very fine and intimate application.
So Sameer, basically this is a high margin product we are talking about. But let's talk about some pricing. The yarn spreads are improving, and today in the morning I read in the newspaper also that there's some imposition of duties coming in, which will favor the yarn folks as well.
Right.
So I just wanted to get the pricing trends and also give us the flavor of the polyester which you buy, the crude derivatives. That price has also been volatile.
Yes.
So just give us the pricing of the entire setup for both yarn, for cotton and polyester.
So as far as the margin profile is concerned, I think in Q3 we saw somewhere the bottom of the margin profile. Even historically, अगर आप देखते हो तो those kind of EBITDA, 8-9% EBITDA numbers are generally towards the bottom of our cycle historically, and that's what we are seeing again because they're improving.
So we are on an upward cycle, you could say that.
Clearly, that's quite clear, and that's for the industry at large. As far as the polyester filament yarn business is concerned, the raw materials are petrochemicals, PTA and MEG, because we are integrated backwards and forwards. So we buy petrochemicals, we make our own base polyester polymer, and then we spin our own yarns. So हम integrated है. This is a crude derivative, like you rightly said. So the prices have been volatile. Prices have been on an uptrend. But luckily, we have some strong supplier relationships. We have some annual contracts. We have material which we procure at least 30 to 40 days in advance.
And you're hedged properly.
So we have all that sort of partial hedging, of course. So that's helped us to sort of manage through this last 3 weeks of volatility. And even the coming 2-3 weeks, it looks like we are pretty much on track with whatever commitments we have from our suppliers at the moment.
And Sameer, there's a movie called Udta Punjab, and I'd seen that also, and everybody who I speak with, they say that there's a lot of inflection point for your company when it comes to Punjab.
Right.
Now, why Punjab, and what's the moat around it? Are you the only player in that segment that you're expanding? What's the entire scene?
So I'll share some interesting data points.
Right.
India is the second largest manufacturer of polyester filament yarn in the world.
Right.
As a country, we make about 4.5 million tons. And abhi iska consumption pattern, if we have to study for 1 minute, about 2.5 million tons is consumed in western part of India, which is Surat, Gujarat, Maharashtra.
Which your company is already doing that in Silvassa.
In Silvassa we have our plant, and 1 million ton is consumed in North India. Now for the last so many years, all the manufacturers of polyester filament yarn, and second largest in the world, imagine, सारे west में है, between Silvassa and Gujarat. We are in Silvassa, and all other
So the presence is not there much in North India.
There's never been a presence in North India. So we saw this as an opportunity 4 years back when we were clear that we had to grow. The company was growing, the market was growing, the market was consolidating. 10 years ago, there were more than 40 manufacturers of polyester filament yarn. Today, there are around 8 key players who have 80% market share. So we saw this as an opportunity to go closer. अच्छा, हमारे customers north में है. We've been selling to them for more than 20-25 years.
Basically, technically, your costing, logistics costs become a bit lesser also, and you get better access.
Absolutely. More than anything, we created a local ecosystem. We become the just-in-time supplier. The customer जिसको 6-7 दिन transit time लगता है, which means he has to keep 6-7 days of stock.
वो कम हो जाएगा.
Comes to 2 days. So from 15 days of working capital, the customer can operate at a 2-3 day kind of working capital cycle, which in any manufacturing business is a very big, it's a soft but a very big advantage.
Interesting. And Sameer, looking at the timelines, because timelines is all, there's a Madhya Pradesh angle also for your expansion. There's Punjab also. The expansion timelines, dates, what are those?
So I think first Punjab is the key. Also I want to just bring up the return ratios that you were talking about. I was listening
because
to that.
of the industry, there is some pressure on that.
No, the most important thing is that when we do such a large capex and we are more than doubling up polyester capacity.
So 1 or 2 years there will be definitely some pressure on the return ratios.
Exactly. So I'm very confident that once the entire investment of Punjab is done, now we need to get it to optimum capacity utilization, and once that happens, the return ratios from 10 will again be back to 17-18% that we saw in FY23. We're very confident of that. So
we can expect that in 2 years, Samir?
100%. That's what we are targeting for sure.
And Samir, the expectations on the revenue and the PAT numbers. PAT, let's leave that. But the revenue, what kind of doubling of these numbers can happen? Because if the massive capacity is coming in, so we are expecting the revenue also to jump. So what's the numbers currently and future?
So FY25 we did about 3,000 crores, and the Silvassa facility, when running and operating fully, which we do consistently, has a potential of around a 3,000 crore revenue. Now Punjab has in phase 1 a potential of an additional 3,000 crore revenue. Now Punjab just started in September. So in this financial year, we will barely get an additional revenue of about 700-800 crores from Punjab.
So that's anyway small, but chunk
FY27 is what we should look at. The FY27 number, what we are targeting is a revenue of 5,800 crores with Punjab fully running for phase 1 for the entire year of FY27. Having said that, we have a phase 2 already that's planned. Major capex of phase 2 is already done in phase 1 because the land, infrastructure, the entire utilities, everything is already done for both the phases.
It's sorted.
It's all sorted. So now we need to add the machines, increase the capacity, which we'll do in this financial year. We'll be executing in this financial year. So in FY28, the phase 2 of Punjab will give an additional revenue of 1,000 crore rupees.
Okay, that's pretty much interesting, and that addition comes in. We understood the guidances, we understood the entire numbers, but these debt levels are of course going to be higher for at least 1 more year. Any debt reduction plans in your mind, or because you have a good stake as a promoter also?
Right.
Are we looking at some kind of a sale
So
in the market?
the debt that we have today on our books is our peak debt, and the phase 2 of Punjab, the MP project, the technical textile yarn that we're doubling in this year, in Q1 it'll be up and running. And I'll talk a little bit about that after the debt discussion. So all this we're going to do from the future cash flows that we have in the company. So the cash flows are
yes, I saw the cash flow management was strong.
Yeah, so cash flows are healthy. There'll be no more debt on the books that we'll be taking for all the future expansion.
So this is the peak debt we are talking about. Next 2 to 3 years we'll be having that.
Yes, and every year we are reducing it. There is a timely repayment that's happening every year as per the schedule. So every year the debt will only go down.
So likely in the 4th quarter you can give us the debt reduction plan also, if that can happen.
Right.
But Samir, technical textile is something which I have spoken to fund managers also, and a lot of investors from abroad also. They are very bullish in this phase. There's a little bit of moat on it, and the applications, if you see, it's not easy for any random player to come in. So how does this technical textile play out, because it's still very nascent for the market to discover this? Just could you explain us?
So technical textile, as this is the future of textiles, it's a very exciting space. It's very niche at the moment. It's a very small market.
So these raw materials are generally for what? For these technical textiles?
So we make the yarns again for technical textile. There is a large variety of applications that are being developed in India right now or are currently being made in India, right from defense textiles, geograde fabric that's used for construction of roads and dams, deep sea fishing nets, high tenacity nets, ropes, safety slings, multiple applications, high-end luggages, so many such applications, your parachute fabric, your seat belt fabrics, your airbag fabrics, all those automotive applications. So different applications, different industries from construction to geotech to agrotech, medical applications. A lot of this is being used in India today. We don't make it in the country,
generally,
but slowly
what's the
it's
margin profile
happening.
for that, Samir?
So compared to, let's say, the regular yarns, the margin profile in technical textile is higher by an EBITDA of around 5% is what we see at the yarn level.
So we are targeting, say, in the coming years, we are back to that 15-17% mark. I presume the technical, exactly, and of the return ratios. I just want to ask, this technical textile is right now, say, below 5% of your revenue, last time I checked.
Right.
So can this come to 10-15? Because that is where I think the industry is moving.
So, in a percentage, coming to 10 will not happen immediately, because even my entire...
You are doubling your capacity
my
anyways.
entire pie is growing, right? So, when the polyester is growing more than double, even the technical is growing more than double. So, at a ratio level, it will still be around 4%. But in terms of revenue contributor, it will double from here. Because right now we're making 9,000 tons of yarns for technical textile per annum, and in Q1, April, May, June this year, we'll be adding the additional 9,000 tons per annum. So that'll make it 18,000 tons per annum.
All right, and in 3rd quarter, there was so much one-offs which were there. I kept on explaining our audience, and just wanted to get that perspective. 4th quarter, will this be repeated, or most of this won't be there?
No,
because the street is expecting 4th quarter will be a turnaround.
It surely will be, because all the episodes that happen in the third quarter, one-time, one-off episodes.
One-off accounting treatments.
And generally it doesn't happen so much in one quarter.
And everything happened.
But everything happened. Also, it was our ramp-up phase of Punjab. We just started Punjab. So there was a lot of one-time cost involved in ramp-up of any facility that's so big. So that is behind us, plus all these external reasons
Sameer,
are
what about
behind us.
Madhya Pradesh? We spoke extensively about your growth plans, but Madhya Pradesh, I want to get some flavor on that.
So there is an amazing PM Mitra Textile Park that's coming up in Madhya Pradesh, in Dhar, MP, and we've been allocated 49 acres of land. We're looking at growing our cotton yarn division further in Madhya Pradesh. So currently we have 132,000 spindles of cotton yarn capacity. We are adding an additional 72,000 there in the first phase, and a lot more plans in the future out there as well. Sharad.
Right. And Sameer, this is a very special segment which I do. Like, it's basically, even you're 100 years plus in this industry. But if you had 3 lines to pitch your company, what would that be?
The yarns that we make at Sanatan Textiles are used by you and me every day, everywhere. They touch your lives, touch my lives, touch everyone's lives from morning to night, knowingly, unknowingly. So many products that we use are made from our yarns.
Second one?
It's sector agnostic, so it doesn't matter which sector, which industry does well. There is something for us to sort of pivot towards and make sure we keep running.
And third one?
Capacity utilization, growth, and second generation being fully involved in a business that may not be as exciting as tech or AI or software or finance. I think that's another strong point we have.
But I think, Sameer, apart from second generation or third generation being there, there's a professionalization also at play. And this is something which I've seen, from traditional textile companies which grow up, and then they go up for the next level where professionals also come in with the second generation.
So true, Sharad.
as well.
I can proudly share with you that in the last 10 years, we have sort of navigated and pivoted towards a family-owned, professionally managed hybrid setup.
So that's
which was not there 10 years ago when we started, like any Indian business.
Right.
It was a family business when it started.
So this is one of the stories of Bharat which I like to point out. And from there, what next alpha comes, 0 to 10 you had come, the next generation gets 10 to 100. So that's what we get. That's the beauty in KYC which we get. Thanks a lot. We are out of time, but conversations will continue. It's a pleasure talking to you, Sameer.
Thank you, Sharad. Thank you.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you watch Know Your Company weekdays at 11:30 a.m. to
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. It's been a tough year for equity markets, and it's barely the first quarter, and it's also been a tough year for the Indian rupee. And this follows on the back of another tough year, which was 2025. So the question that we're asking today is, obviously, how is the weaker Indian rupee affecting you? Why is it taking place right now, this slide in the Indian rupee? And what should you do? Is there a way for you to hedge against the fall in the Indian rupee? I'm joined by Mohit Gang, who's a co-founder and chief executive officer of Moneyfront. Mohit, thanks so much for taking the time. Let me ask first, again, neither of us are economists, and so our understanding of why the rupee is falling is from a layman's perspective, and I think that's perfect because most of our viewers are in fact laymen or lay women and laymen. So therefore, let's lay it out. Why is the rupee sliding as much as it has?
Okay, thank you, Alex. Always a pleasure to be talking to you. And look, I think from 1 rupee a dollar in 1947 to almost testing 94 levels, I think rupee has had quite a dramatic fall over the last many years, right? If you see the average fall since 1947, it's around 4.5% for the currency. This year alone, we have since the start of 2026, we've had a fall of almost 8% odd. So, and rupee is around almost like one of the worst currencies in the world globally right now. Right. What has led us to this way? Honestly, I think we've been running a trade deficit for a pretty long while now, and our trade competitiveness is nowhere amongst the global trade giants of the world like a China or any other country. We don't have a very specialized trade playbook. We do export quite a lot, but still our exports are much lesser than our imports. Again, explaining it in layman terms, and perhaps that continues to build on pressure. The recent Middle East crisis, or the West Asia crisis, has added fuel to fire because our biggest import basket is oil and LPG and CNG and PNG and fertilizers and so on and so forth. And all of that are threatened because of the escalation in the West Asia. And I think that's putting extra pressure on the currency because we are not getting enough supplies of what we were importing, and the costs have gone up, spiraled dramatically from last year's average of $67 a barrel oil. This year is already quoting about $100 a barrel, right? And the Indian basket is much costly, as I understand. So these are not normal times which we are living in, Alex, and perhaps the pressure on currency might continue for some time, though it has fallen quite a bit. And you never know when the technical resistance comes into play. But yeah, if the crisis continues and persists, and the price of essential commodities because of oil prices going up, which is leading to the transportation, the logistics price, the raw material price in multiple industries all going up, will kind of lead to a lot of inflation, and that's putting a lot of pressure on the currency as well.
I just want to talk about, be sure that we have the numbers right. The rupee has depreciated over 4% in 2026, and compared with the start of last year, it is down by as much as you said at the start, I think 8%, right? So 5% in 2025, and then another 4% odd in this year. So it's quite a dramatic slide, more than usual, right? So the question then arises, which is, how does it impact us, Mohit? And I think there's a simple answer to that, in that the more the rupee depreciates, the more you're paying for your imports, right? So because you're effectively you're trading in dollar for the global market, and you buy more dollar with rupee ultimately, right? So effectively, for the oil that we're getting, for the gold that we're getting, you're effectively paying more money. That's as simple as it is, right?
Yes. I think absolutely rightly put, Alex. And we are importing inflation. We're basically importing inflation. As dollar goes up, oil goes up, the cost of transportation, logistics, raw materials all go up. Our other big imports are electronic items, that also goes up. So we are kind of importing inflation. We are kind of buying into a costly dollar and spending rupees for it, spending more and more rupees for it. So that's leading up to a lot of inflation in our households, and which is causing a lot of pain in the markets as well.
So from the import side of things, you have to look at it as a negative, but this is positive for those that are facing outwards, right? If you're earning in dollars, it's great for you. And so export-oriented companies as well, it's beneficial for them. For example, the IT companies, as much as they've been hit so far in 2026 and in 2025, they benefit from a depreciation, don't they?
Oh yeah, absolutely. Anyone who's exporting, and especially exporting in dollar terms, I think those are the real beneficiaries. IT services, pharma to a large extent, those are bigger beneficiaries. And obviously, if you are a global investor and investing in dollars, then also you're benefiting, Alex, from the currency depreciation.
But a lot of these companies, Mohit, they hedge against fluctuations in the currency. And for again, this is for the layperson. What a hedge does is effectively it is taking a position effectively, and in this case you're talking about how companies hedge their books. If they're earning in dollars, they want to ensure that there is not too much of a wild fluctuation in the way that they earn, and so if they expect the dollar to move one way or the other, they'll take an opposite position in a derivative contract, and so net they don't see too much of an impact. That is a technical definition. But what you can do, Mohit, and what the average person can do, is that they can hedge against the fall in the Indian rupee, and there are various simple ways in which they can do that. How do they do that?
Look, Alex, I think corporates are any which ways doing it. As you rightly said, they are trading in forward markets and future markets and kind of hedging their exposures. And predominantly IT firms are experts in hedging, and there are very few corporates who have large export positions and do not hedge. But as investors, as individuals, we are the ones who are almost every time unhedged in our positions, which means we are earning in rupees, we are spending in rupees, but our lives are impacted by the dollar movement. And none of us are spending enough time thinking about it, right? So on a daily basis, our purchasing power parity, globally, if we compare it, or relatively compared against the global economies or global diaspora, we are kind of depreciating, or we are kind of losing our purchasing power parity. So one has to also hedge against this kind of. How do you do that? Pretty simple. You invest into global assets, either USD denominated assets or any other global currency assets. That's your biggest hedge, because then you start earning in dollars and you're spending in rupees. So in a manner, you are also taking up your asset size of the balance sheet by preserving your capital and making your capital grow in dollar terms. If you are a global citizen, you are allowed to do FCNR deposits. You're an exporter, you're allowed to export and earn foreign currency. So those are all the ways. But I think for a layman individual, investing in USD terms or investing in dollar denominated funds or investing in offshore mutual funds is the best, easiest option available to hedge your currency risk.
What about gold, Mohit? Because you buy a gold ETF, and it is effectively, I think a lot of people don't pay attention to this fact, but India, and we discussed the fact that we do import quite a significant portion of the gold that we consume, we are a price taker. And so anything that moves in the global market is reflected in our prices. But if you look carefully, Mohit, and I think that a lot of our viewers should go and do this, if they chart out the ETF returns over the last 10 or 15 years, they will notice that Indian ETFs have returned a little bit more as compared to the global return in gold. And that's because it also factors in the depreciation of the rupee, doesn't it?
Oh, absolutely. My bad, Alex. I missed out on that, and thank you for pointing it out. I think gold, silver are all dollar-denominated assets. Even oil is dollar-denominated assets. So whenever you're investing in gold, you're effectively hedging against INR depreciation also, because gold returns are not just the international price movement returns, but also the returns which are embedded with the rupee depreciation, right? So that's effectively like saying that okay, 4.5% is up there for taking if the rupee continues to depreciate, and then over and above that, you also make what the physical metal does in terms of the actual bullion price movement. So yes, gold is a great natural hedge. So if you're not even keen to invest globally into international funds or something like that, you can always have build gold positions in your portfolio to give you a natural hedge and also kind of help safeguard your portfolio to a large extent against equity volatility.
Okay, the question then, Mohit, is as we stand in March 2026 with this turmoil globally, what should you do now? If you don't necessarily have either a large gold position or you don't have a large global equity position, should you now look to bolster? Because you've had an underperformance of the Indian equity markets at the same time. So some might argue that this is the best time to deploy in our own markets. So how should you ensure that you're protecting against further rupee depreciation and making use of the opportunities while also correcting imbalances in your asset allocation?
Look, Alex, I think even if you look at our markets from a valuation perspective, we are not very cheap in spite of the correction we have seen. Perhaps Nifty on a 10-year forward, if you compare Nifty's forward multiple to a 10-year average multiple, we are just about there, or maybe relatively a little cheaper. But the BSE mid cap or the BSE small cap indices are just at the average valuations, or maybe a little higher than that, right? Perhaps with today's correction, maybe we come to the normal level. So for an investor, it makes immense amount of sense to go out and scout for global markets where they can A, get attractive valuations, and B, also hedge against rupee depreciation. Right. So the better ways to do A is either do fund of funds, which are the domestic mutual funds. There are a lot of funds which are closed now, but there are still few ones which are open for subscriptions, and you can invest into US markets or any other global markets as the nature of the fund would be. And it's a very simple mutual fund route, right? So that's a very impactful and an easy way of investing overseas. The second way is obviously through GIFT City, where you can do outward LRS remittances and invest through GIFT City funds, or you can directly do LRS and invest directly into offshore markets through your bankers. So those are routes to invest in offshore markets. And there are many other platforms available in the country today which facilitate these kind of trades. So one can use the online platforms and can easily access global markets and global investing. Gold. While sitting here, one can easily continue to buy gold in rupee terms domestically through ETFs or even physically. Whenever you're buying gold, you are hedging not just against inflation, you are hedging not just against the geopolitical volatility and global uncertainty and so on and so forth, but you're also hedging against the rupee depreciation. So that's again one of the most easy things to be done. Just continue to buy gold. I think as part of your asset allocation, having 5 to 15% or 5 to 20% allocation in commodities, especially in gold, is always advisable. Similarly, having 5 to 20% allocation in international equities or in US dollar denominated funds is always advisable, because finally you have to look that India as a part of the global market capitalization is hardly 3.5% or 3% of the global market capitalization, right? So we have a long way to go, and there is a lot more bigger market which is available for us to access, and we cannot just be sitting here in India and banking solely on the domestic returns and domestic currency.
Quick follow-ups then. One, if you're looking at international, do you focus on US assets, or do you look at several other markets? Because the way that they've run up, Mohit, and the volatility that they're seeing right now is quite incredible. For example, people are drawn to the South Korea market, but as you and I know, the Kospi, the weightage that Samsung has, for example, is very significant. So there is concentration in each of these markets. In Nikkei 225 in Japan, or even in Brazil, there is concentration. So do you stick to the US?
Alex, I think the first choice will always be US because they are 60 to 65% of global market cap. You can't ignore a market of that size and scale, which is also the harbinger of all technological innovation globally, right? Now, whether you are investing in the US top end, you are investing in NASDAQ, or you're going a slightly broad-based S&P 500, that's an individual's choice. Or you can even access the Russell 5000 or the US mid and small caps, right? But the market is extremely deep, extremely liquid, and is one of the largest markets available, so one cannot ignore it. Having said which, there are basket of ETFs now available, which will give you exposure to European ETFs, Taiwanese ETFs, Japanese ETFs, so on and so forth. One can also look at A, having a US exposure, and B, along with US, having some other different geographies or different themes globally, or perhaps a global basket of ETF, which captures all the emerging themes and other emerging economies together, right? So one US, one global ETF, and then obviously you will have your domestic allocations along with gold.
And last question, which is, if you have to increase your allocation, should you do it at once if you have the funds, or should you do it incrementally?
So given the way we are poised right now, Alex, I think it will be blasphemous for me to tell that we should just go all out unless you have a heart of a lion, right? I think, yes, 3 to 6 months is what in the current context I will advise clients to or investors to go with in terms of staggered allocation, whatever be the market. Even the US markets have run up a lot, and perhaps you might see some correction in US markets once reality dawns in and once the war kind of stops. So my sense is 3 to 6 months, and for conservative investors, around a 1 year kind of a staggering is.
Even gold has dropped quite considerably from the high point, right? 15% off the high point.
Absolutely.
Yeah. So, but Mohit, thanks so much for taking the time. Pleasure speaking with you.
Thank you so much, Alex. Always a pleasure.
It's important to talk about the role of passive investing in your portfolio. And to that end, I'm joined today by Vandana Trivedi, Head of Passives at Axis Mutual Fund. Vandana, thanks so much for taking the time. I want to ask about this because over a decade I've been speaking now about why passive should be part of your portfolio. But I know that of late, we're thinking about broadening the scope of that quite a bit. Previously, we would only talk about large caps. And the tendency is to go only towards large caps. Why do you think that is? Is it more to do with what people have always done, or is it something else?
I guess a couple of things there, Alex. One is obviously data has been supporting large cap for a very long time now. Of course, you know, one must mention here that even in the large cap, there are periods where active fund managers do better than passives. But predominantly, as market gets a lot more efficient in information, and as more research analysts are, looking at some of the very large companies out there, there's very little scope left for an active manager to really look for things which the market hasn't looked for yet. And probably that's the reason why passives has been able to do better than actives in the large cap space, because obviously passives come with the advantage of cost, right? And therefore, investors and advisors alike have been speaking about the relevance of building your large cap equity portfolio with passives, and that should be a core portion of your overall equity investment portfolio, and that's what we are advocating too. However, obviously, there is merit in keeping your eyes open for data for other capitalization segments, for other segments, to see if there is long-term data or track record to show if passives is actually, making itself felt in those spaces as well. So I think that, there are segments, there are pockets within the market, besides just large cap, where passives seem to be indicating very, very consistent outperformance.
One of those categories is, in fact, the mid-cap category. And more and more, and Vandana, I'm not sure if it is only the sign of the times, where this conversation over the last particular 2 years has gotten louder because it's become harder for the fund manager to beat the benchmark, particularly because you're talking about only 150 stocks, which accounts for about 65% required allocation. So it's hard to pick and choose, and you have to utilize the rest of the space also very, very well, right? So is that why you've had less active beating of benchmark in the mid-cap category?
See, there are a number of reasons why this may have been possible, and you're absolutely right. Mid-cap is such a pursued space, Alex. In fact, you just have 150 stocks, but the mid-cap category as such is the second largest category within the active equity schemes, right? It's just second after, it's in fact larger than large cap, and it is second only to flexi cap. And I'm not even counting the mid-cap in the large and mid-cap space, the mid-cap component in the flexi cap space, etc. So there is, you're right, a lot of money chasing just those 150 stocks. And maybe we are again talking about, information efficiency creeping in that space. And in fact, at this point in time, and I think, in investments, you always fall in the trap of premising an argument basis the current returns. But that is what it is. But at this point in time, if you see over any time frame, including until up to 10 years, the index, which is the more commonly followed index, which is the mid-cap 150, Nifty mid-cap 150 total return index, has done a way better, or the outperformance is significant when compared to active mid-cap funds. So this applies for the last, 1 year returns, the last 3 year returns, the last 5 year returns, the last 10 year returns. So there is consistent outperformance, and the index is outperforming 75% of the active AUM out there. And if I may just add, for the benefit of your viewers, there is also another index within the Nifty Mid-Cap 150 index, which is a subset of the Nifty Mid-Cap 150 index, which is the Nifty Mid-Cap 50 index, which is essentially filtered from the Nifty Mid-Cap 150 index. The filter is basis, market capitalization and liquidity, etc. Now, that index, it has a higher track record, or a more significant track record of outperforming active mid-cap funds. That index has actually beat almost all active mid-cap funds hollow for the last 3 year returns, for the last 5 year returns, etc. So clearly, I mean, the summary being that this country has seen a lot of very, very talented and effective active equity fund managers who have really done a lot of service to investors in delivering wealth over longer periods of time from the mid-cap space. However, data seems to be indicating that investors may be better off also looking at, index-driven exposures to the mid-cap space as well. Your investors are aware of the various benefits that come in from passive investing, costs, lack of human intervention, etc. So, try to get those advantages, and there's data to show that mid-cap indices are doing better than active mid-cap funds.
This is not true, though, for the small-cap category, Vandana. This is where fund manager news comes into play, and the ability to select stocks. And usually you've seen fund managers have pretty long tails in their portfolios, and that selection, because a small cap actively managed fund can go well into the micro cap category to pick and choose stocks. So is that the reason why you have more active beating passive in the small cap category, or is there still an argument to be made to add small cap into your basket of passive?
We are the passive. No, absolutely right, Alex. I mean, we obviously look at data very, very closely to keep track of the solution that's best suited for investors. And I think in India, active fund managers in the small cap space are doing exceedingly well. I mean, there is very little data to substantiate or to validate that index investing through the small cap route would make sense. I cannot even say that the data is divided. So there is absolutely uncontested alpha generation coming in from active fund managers in the small cap space. Not your question, but also very useful to point out that active fund managers are doing very well in the flexi cap space as well. So all your flexi cap funds that are seeing flows come in, that's money going to the right places, hopefully. I mean, active is again doing very well there. To come back to your question on, why do we think active fund managers are able to score over indices in the small cap space. I think again clearly, there is. I mean, I think the small cap space comes with a lot of extremes for potential to make money or to make returns, as well as extreme potential to lose money. So active investing is not so much about just the right stock picking. It's also a lot about avoiding accidents, right? Avoiding falling into traps. And I think that all of that is being done exceedingly well by active fund managers. So in the small cap space, wait some more time and see how the passives is shaping up in that space. But mid caps clearly looks like you do well to have some passive exposure to your portfolio.
So if you were to club that and to say that you need to have a diversified approach in your passive strategy as well, there is also this whole realm of smart beta that you throw in, and some of those do have your broader market exposure as well. So Vandana, what strategies in your opinion or opportunities lie in that basket as well?
Yeah, so Alex, I can be very topical and give you a current recommendation, which is that value has been doing very well, and the market is demanding more for the price that the market is seeking from you. Investors are demanding more, and therefore value has been doing well. But the one recommendation that we give our investors, Alex, is that smart beta investing, which is basically what we otherwise also called as factor investing, is a very useful ingredient or a useful approach to equity investing. Essentially, you're building a portfolio out of those factors which have an impact on returns from equity. What are those more common factors? They are low volatility as a factor, value as a factor, momentum as a factor, quality as a factor. Now, I can take you through the aspects around each of the factors and in which situation what works well, etc. But the best route for an investor to start off on smart beta investing or factor investing, as we call it, is to just go ahead and blindly buy a multi-factor fund. There are indices which have equal weight to each of those 4 factors. Now, only in hindsight would we know which factor did well, right? Or obviously you can take a call, you can take a view and hope that your view has come out right, but then you're doing active investing again there. The best way to go about this is invest in an equal weighted factor index, which has an equal weight to all of these 4 factors. And past data has shown that such a combination has actually outperformed at least 2 to 3 factors at any given point in time. Obviously, there will always be one factor that will outperform all the others. And if you're able to catch that, great. But we realize that you really cannot predict that in advance. So you might as well have an equal exposure to each of these factors and build a portfolio out of what we call as a multi-factor fund and see the benefit of equity investing through this route as well.
Interesting. All right. So several options that we've discussed beyond large caps. So if you thought that passive investing is only about large caps, well, think again. Vandana, thanks so much for taking the time. Pleasure speaking with you.
Thanks, Alex. Likewise. Thank you. Bye-bye.
Bye. Well, that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in, and do stay tuned. This is NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, Join me in the midst of our people, language, and politics. Vanakkam Tamil Nadu. Here we come. Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you...
Markets for over.
Vikas Kimani, founder and CIO at Carnelian Asset Management and Advisors. You know, my question to you is, with everything that happened overnight, the question was, are we seeing any relief from here on? Will that continue or not? We did see a swing of around 800 points on SGX Nifty. It cooled down to around 300 to 350 points. What does this actually tell you? Is there hope from here on of a relief, or are you still going to see some bouts of weakness?
Hi, good morning. So I think, we have seen over the last couple of weeks, things have kind of escalated, de-escalated. So over the weekend when, Trump made a statement that 48 hours warning, and within that they have to do, I think market got really worried, and that's what led to sell off on Friday. And, then there was another statement which came about, yesterday, saying that, there's a de-escalation expected, and Iran countered that. So when the expectation of de-escalation happened, the markets bounced, and you saw 800 pound kind of Nifty give. But you saw the correct this thing from Iran saying that it's probably they are not into it. So I think these kind of statements are coming and flying. But one thing becomes very clear out of this statement is that I think President Trump is under tremendous pressure to back off on this stage. He probably does not have a lot of firepower left from an ability to withstand high yield, high oil prices from his own political sort of electoral perspective, and his pressure on the domestic economic perspective. So it looks, and it's very much similar to, we saw the same thing playing out in the tariff war situation where, we would take the same approach, and then within 1 or 2 weeks time, there's a deal which is there. It happened with China, it happened with other places, right? So I think that's probably his style to do things. And in that sense, I believe that it just only indicates one thing, that probably there will be a deal soon around. Whether it takes 1 week, 2 weeks, I don't know. And I think this statement has only that implication. If Iranian side also came out supporting that, yes, we will do the deal, then probably market would have rejoiced that the trajectory and gain would have continued. But probably still there's more sort of ground to cover. But looks like that this is probably first indication towards a resolution very soon. But these are the things you never know, how they pan out. But my sense is that, these are the times generally give you also good opportunity to look at from a medium to long-term perspective.
Fair point. Vikas, I might be stealing Neeraj's question, but he's described it very well over the course of the last 3 weeks. In fact, he was one of the earliest to point out that you shouldn't be rushing to buy the dip, as a lot of people say. And he was saying that you should wait for a sign of a green shoot before you deploy big money. And he's also very ably described the different types of investors that you might have. Those that are comfortable based on their thesis on valuations to deploy at certain levels, and those that maybe want to see some signs of positivity before they deploy. Is this, in the latter part, that sign of positivity, in your opinion, Vikas, to start deploying in a big way, or would you still hold your horses?
So I think, so I would still not go in a big way because these things tend to go in different way. We don't know, right? I mean, geopolitics, something I don't think, in my opinion, is outside ambit of people discussing right now because they have different pulls and pushes. But if you just look at the trajectory, it just kind of gives you one sense, in my opinion, that probably US may not continue or is not in a position to hold this for a very long time. They cannot afford oil price above 100 for very long. So yield going up for very long. So to that extent, I think it gives some comfort. So I would say, and by the way, in my opinion, it's not that, these will not have an implication. March quarterly earning will, for most corporates, will be difficult. Q1 probably, because supply chain once broken takes time to come back. And we have seen a lot of disruption already in place. So I would say that still some impact on the corporate earning would happen. So keep that in mind. And accordingly, I would say, nibbling in investing into these downturns of your stock, which you like, is probably the idea we've been at least adopting, and we've been doing that, including through yesterday and today.
Because just on that last point that you were making about the implications for earnings, before the conflict, I think a lot of people were relatively more positive than they had been at the start of FY26. Where they were talking about one low base, but they're talking about several other factors, reasons why earnings uptick would take place, and double digit was par for the course. Does that get meaningfully affected in your opinion, or is it too early to tell?
I think, March quarterly earnings will definitely get impacted. Think about it, any business perspective, you have no control on your supply chain, you have no control when your goods will reach to customer, your currency is way out of the way, your energy prices are way out of the way, gas availability is not there, many companies are struggling with that. So all those things, especially towards the end of the March, when these are generally peak, there's a peak month for most companies. So I think, these kind of disruption definitely create a huge amount of impact. And I am quite sure that, the March quarterly earnings for many companies would be kind of disrupted. But that, I think, market has already kind of factored in that sense. Transaction, the direction of the corporate earning recovery was good before this conflict started. And to that extent, it gets impacted, and it might get delayed by 1 or 2 more quarters, depending on how fast it gets over.
Because you have an uncanny trait of sifting through noise and identifying maybe trends that might be emerging a few quarters out, right? Are you therefore looking to deploy cash, whatever little you might be want to deploy right now, in bombed out themes where there might be a near-term implosion, but the medium term remains intact? Or are you wanting to go for certainty right now?
No, I think, look, again, you don't want to, one thing I must tell you, Neeraj, there's never a certainty in market. It is only perception of certainty.
Yeah, but hypothesis, right? You build a hypothesis because you've always done that.
Correct. So, correct. What I'm saying that 2 months ago, we did not know this war would happen, and I would have given you answer, no. What I'm saying is that, so these kind of things do pan out. So in investing, you have to always assess your risk reward. Right now, to answer your point specifically, that many stocks companies which have corrected because of this war significantly, for example, let's take, aviation. Right, stocks have corrected significantly because of this conflict, high oil prices. But does that structurally damage the sector? Answer is no. But does it change for next 1 or 2 quarters? Answer is very much yes. Right. So those are the kind of dislocations you kind of use to get into those kind of sectors, because eventually it will come back, and we all know that this will settle down. Now we don't know whether it will settle down in a month or month and a half, and that's the kind of critique. So those are the kind of things one should look at. I always say that don't buy for the sake of, because something is corrected, you should not buy. Because you think that it can come back, and it can come back faster when the things get to normal. Those are the companies you should buy. And, I feel banking is one sector where still a lot of corrections have happened, probably not warranted as much because of this situation. And because everybody wants to sell, and the most liquid assets get sold off, and that's where I think we've seen in banking. So probably that could bounce back very fast because the economics, the growth trajectory has not changed as much as other sectors. So those are the kind of pockets you look for and kind of put your money.
So, okay, let me take that forward, because since COVID lows, for example, in banking, it was a turn in that PSU banks as a cohort outperformed private banks quite substantially. Maybe they became more efficient, maybe the valuation multiple caught up, maybe a combination of both or more, right? We've now seen 5 or 6 years of that phenomenon playing out. Your constructive banking, would you believe the leadership will change? Would it be large private banks? Would it be mid-sized private banks? Would it be PSU banks? Where is it that you think the next cycle leaders will emerge within that banking space?
So I definitely, we are positive on PSU Bank as a space for no, definitely because the valuation comfort, these companies have definitely, many of them have done very well. The CD ratio is much better place as compared to private sector banks when we, so that there's a lot more space for growth. And hence, at least if you see next 12 to 15 months period, PSU banks can, sort of do better than private sector bank. But again, those are the things you keep changing in your portfolio as and when required. But we've been having also exposure to private sector banks, especially banks like ICICI Bank. We've been positive for quite some time, and I think there's no challenge in terms of growth out there. So generally speaking, of course, we are positive in general on the sector, but then you go down in stock specific, you look at, the banks you like, which have the drivers to growth. Because in this now, many banks are, in private sector banks, many banks are struggling with the CD ratios and, so which are the most, those things you have to really analyze.
Okay. Vikas, you're talking about banks and, the divergence between PSUs and private. But one question I want to come back to, I want to pull up from your previous answer where you spoke about that if this war continues as well for the next couple of months, we don't know where it goes. How would you differentiate correction versus crisis as an investment strategy? Because there is a potential of this geopolitical blip that does come in and then we see a bounce back that is there. But the consonance to this is a structural shift that happens as well in terms of markets. So what would your view be on this aspect and the way FIs and DIIs are building in, because DIIs are supporting the markets for quite some time now. Till the time the FIs don't come back, do you think the support of DIIs will be enough?
First of all, I think, on the crisis versus this, the question is, today we don't know how fast it can escalate. Tomorrow, let's say, if the large energy infrastructure is destroyed, I think we are in a very prolonged crisis, energy crisis in the world. And that can lead to global recession also. That's the probably most pessimist view one can take, saying that, let's say, assuming hypothetically speaking, 20-30% of energy infrastructure, including gas, gets destroyed. Then we have a real trouble. I mean, no matter what, nothing works. I think all hypotheses, in my opinion, are off for next 2 years. But then you have to make a probability that is that possible, because everybody knows that who are going to destroy also that infrastructure also know the downside of that, right? So then you make a call that probably that outcome is unlikely, and hence you use the opportunities where, and especially post yesterday's statement that unlikely. Again, you can never say for sure that this is likely to happen. Who knows how things play out in the world? We don't know. But my currently working hypothesis is that it should get sorted out soon, and hence you kind of look at sort of those opportunities. So what was the second part of the question? I missed it.
Was in terms of the FI-DI dynamics, because when you're talking about the support that's coming in from the DIIs, for how long will they be able to support if there is a further correction or if there is further escalation that will happen, because FIs are absolutely missing?
So it's not a question of support. I think, in my opinion, smart people who will, and I think in that sense, this really speaks well about, the maturity of Indian investors who have, not, whether it was COVID, whether it was Ukraine war or any other tariff war, I think they have used that as an opportunity rather than as a threat, because the long-term fundamental story is there. Indian belief of investors in the long-term equity allocation is there. And hence we have seen, the allocation going from 1% to 6% of total household savings. Still we are far away. So in my opinion, we should not underestimate the potential of domestic investors. It is not supporting, they are putting money where, the long-term opportunity lies. And I'm quite sure that at some point in time, even, foreign investors also would realize that. And now whether that happens in 3 months' time, 6 months' time, we'll only know. Incrementally, I am beginning to see that people are, based on our interaction, saying that now India beginning to look very interesting. So let's see how it turns out, because, in a global fact of the matter is that today as a country, we don't have a lot of leverage, in this current geopolitical situation. We are on the receiving end probably on most of the counts. And that's a reality. We can't wish that away. We are dependent on imported energy. We are dependent on a lot of other things. A lot of capital flows are also kind of constrained. So I think, and that's led to the currency depreciation as well. So I do believe that, some point in time that, we are still less than 2% of the world, assets of foreign assets into India. And in my opinion, that will change. Now, whether that changes 3 months' time, 6 months' time, I don't know. And when that happens, you will have double engine of liquidity which will play out.
Vikas, obviously, a lot of investors like yourself would look bottom up, right? And that would be the focus. But I'm just asking, how much attention are you paying to macro at this juncture? Because with the rise in input costs, specifically crude oil prices, trajectory of monetary policy globally might shift. And I think that is already being priced in Europe, for example. In the US, the Fed could well hike if there is a trajectory to inflation that remains sticky, right? So what does that mean for us here in India? The Reserve Bank of India ultimately is an inflation targeting central bank.
Absolutely, Alex. I think, see, macro, you have to pay attention. You cannot wish that away. And that's why I'm saying that, good news is that as far as India is concerned, our macros have been very good. Our inflation is well within the target. And that's the reason I think even high inflation to oil price is not hurting us as much. But will that not hurt if it continues for a very long time? Answer is no. So I think, you have to keep watch of all the situation. I think as compared to most global countries, Indian macros are far more well placed. Of course, do we need to do a lot more? Answer is yes. In terms of investment cycle, can we boost more growth, and all those things are fine. But generally speaking, from a crisis handling perspective, our leverage is low. Corporate debt, or whether it is government debt, our banking system is very solid. Our interlinkages in the global financial system is right now very less. So to that extent, I think we are on a relative basis insulated. But so hence, you have to keep that in mind. But, this event is very, very important, which will impact all global economies, including India.
Fair call. Vikas Khemani, I loved the way you qualified your answer that this is your thesis with the current point of information at the current point of time, because the world is moving very, very swiftly and events are happening at the rate of knots. Thank you so much for joining in today and giving us your thoughts.
Thank you.
Dr. Badri Narayan, who's Dr. Badri Narayan Gopalakrishnan, who is the fellow and ex-trade head at Niti Aayog and faculty member of Boston College, USA, Johnson, right now on the show. Thank you so much, Dr. Gopalakrishnan. I hope I can address you that.
Yeah, definitely. Thank you. You can just call me Dr. Badri. That's fine.
Okay,
Thank
Dr.
you so much.
Badri. Okay. So, Dr. Badri, tell us a bit, because the last 40 days have shown that things can move in hours what usually takes weeks or months, and the last 12 hours are symptomatic of that, right? That there has been a relief of sorts that maybe this is coming to an end, only to be vetoed by the other side that, okay, hey, things are all over. And then apparently the Israeli media has quoted that maybe April 9th is the end date. How do you place all of this when you think about what will happen ahead?
Yeah, I think it's like you rightly said, it's very difficult to predict anything given all the volatility that you have. But from a very fundamentals point of view, like, what is happening, what are the intentions, where are the possibilities, feasibilities, and so on. And then all these escalations that we have seen, the responses, escalations, and so on. I think we can be pretty realistic when we say that this crisis is coming to an end. But yes, it may be a week, it may be 2 weeks, 3 weeks, we don't know. But at least, as you mentioned, the information we got from the US, from the president, suggests that at least next 3, 4, 5 days, there won't be any major escalation. But like you said, the response from Iran is not very positive.
Yeah, exactly. So Dr. Badri, therefore my question, right? I mean, how does an average Joe think about this? Are we nearing an end, or is it difficult to say?
Yeah, I mean, the easiest answer to say is it's difficult to say, right? So it's difficult to say. But I think there are enough indications that, see, when the whole thing started, we didn't know whether it is a 1 year war or 2 years war or a few months war, so we didn't know that. But right now it appears like it's likely to be a short-term situation, right? So because, when it all started, I was actually thinking of the way Russia-Ukraine situation and the Palestine-Israel situation has been escalated for many months and even years. Many of us worried that this also might happen that way. But right now, what I'm feeling is from the US side, what I feel is they're kind of understanding or acknowledging the reality that Iran is not easy to contain or fight with and so on. Whereas Iran is showing its strength that we are not giving up. We are going to go all out. So I think this is kind of the Iran's aggression is kind of giving the US the need to sit back and think and re-strategize. I think that is actually a quite an important development which came in the last couple of days. That's yesterday, and I think that is why I feel like this back and forth will happen, but it's definitely not a multi-months thing. I feel it should be like by May or June. I think we should be perfectly fine. I think even now there is some kind of ceasefire and back and forth happening, but I feel like we are marching towards some kind of stopping of escalations. That's what I feel.
Yeah, Dr. Badri, the initial indications, and this is something we were reading, unconfirmed perhaps also, is Donald Trump stating that there would be joint control of the Strait of Hormuz between Iran and himself. How does that work from a geopolitical standpoint? Because there are so many entities that are affected by this strait. How can it be owned by two entities that were on opposite sides of this conflict?
Yeah, I mean, that part is very unclear now, right? So President Trump is saying that he's talking to a top leader in Iran who is not part of who is definitely not the new supreme leader. So we don't know who exactly that is. So it could quite possibly be the new new regime that US wants to be put in place in Iran. So we don't know what is going to happen exactly. So until anything clearer comes out of it, we have to assume that Iran is going to have full control over Hormuz, because the allies have pretty much not responded positively to the US request for sending warships there to defend the transportation in Hormuz. So I think that's where it's going to be. I don't think this joint control of Hormuz between US and Iran is a near-term possibility. It could be longer term if something happens to the regime there in a big way. It can happen, but I don't see that. I think the US endgame is like they want Iran to be like another country in the region, which is allied with the US, collaborative with the US, and so on. So I think that is a very, very distant possibility to my knowledge, to my analysis.
Dr. Badri, good morning. Hiral here. So, if you have to look at Iran-Israel as a conflict which would escalate further, hypothetically, let's take the worst case situation. Do you see any reconfiguring happening in terms of where world trade goes? Because you're talking about the Strait of Hormuz, which is at risk right now, and then you have the IMEC corridor also. So how does that reconfiguration work, taking your expertise in terms of global supply chain?
Yeah, great question. Definitely there is going to be major reconfigurations. We already see that a lot of investment activities that are happening in countries like UAE and Saudi, they're taking a backseat now. So before this escalation happened, there was a lot of expectation and ambition for the region to be a leader in many industries in the global supply chain. So now that is going to change. And also, I think there can be some kind of acceleration of movement away from fossil fuels, which was until now it was kind of a difficult decision for many countries, given the costs involved. But given the uncertainties and volatilities you see in the oil market, it may actually be economically sensible for countries to move towards green energy. So that is one major trend that can happen. The second, the IMEC corridor you mentioned, we did some work on that recently. It can be hugely beneficial for all the participant countries. But now it is logistically difficult to continue that if, like you said, the escalation increases. Because in this kind of situation, we have to look at all the possible scenarios. I was laying out the optimistic scenario, but the pessimistic scenario could be that Iran over-escalates and then the US responds and Israel responds, and maybe some of the other Gulf countries also get into the conflict. So that can lead to catastrophic implication for the global trade, global supply chain. As we all know, the oil and gas trade is completely control by that region. So that's going to hugely escalate these prices. And also a lot of other petrochemicals. We are forgetting about fertilizers and various other chemicals that are dependent on these
helium as well.
So
helium.
the entire supply chain is going to be disrupted.
Absolutely, helium as well. Dr. Badri, thanks so much for taking the time this morning, and a pleasure having you as always.
Thank you so much. Thank you. It's a pleasure.
Pankaj Tibrewal, founder and CIO of Ikigai Asset Managers, joins in. Pankaj was scheduled to come to us at 9:30, but I'm sure he has spent the better part of the first 25 minutes of the markets buying into the markets today. Because Pankaj Tibrewal, while we have about 8 odd minutes for this conversation, what I do know and what I do hear, that you are extremely constructive on ownership of equities in the current context. Is that a correct assumption?
Yes, absolutely, Neeraj. We believe that this correction, which has come after a long time, is a brilliant opportunity to start owning equities and at some point go overweight on this asset class. And my belief is that if you compare it with pre-COVID, the cycle we are in is much, much better in all parameters except state finances and the net FDI part. But most of the other macro parameters are tracking much better than the pre-COVID time when we entered COVID and during that macro setup. And that makes me constructive that balance sheets, both on corporate and households, are extremely healthy. Demand conditions are looking very good at the ground level. Fiscal is in control from a center perspective. Corporates are starting to spend across on CAPEX. And I think people who are saying corporate CAPEX is not happening are blindfolded, in my view. Data suggests otherwise. On the hiring side on IT, GCC are hiring left, right, and center. If you look at the Info Edge commentary, the billing numbers are up 11% in the first 9 months. So I believe certain indicators, except state finances and net FDI, which I believe will start changing incrementally positive. Most of the changes are incrementally, in my view, positive. And once this war thing gets over, oil settles down, I think we are in a very sweet condition. And I've always been saying, Neeraj, for the last 2 years, one of the reasons why corporate earnings was not so good was the deflationary pressure. India needs inflation. At least 4.5% inflation is what helps the corporate earnings growth, because it's nominal GDP which helps on the earnings growth, not the real GDP. And nominal GDP was subdued for the last 2 years. With oil going up, commodities going up, my call is that the nominal GDP will inch up to 10.5-11% in FY27, which will aid strong earnings growth for corporate India, maybe about 12 to 14% earnings growth, which will happen after 2 years. And once corporate earnings growth starts to come in, I think markets will find its own level. And from a valuation perspective, I think froth is up. The median correction on broader market is about 32%, along with the price the P derating which we have seen. And I think that makes us constructive. After a long time, Neeraj, I am able to create a portfolio. I am able to find stocks at your own price where we believe earnings could double in 3.5-4 years. That was not the case 1.5, 2 years back. So I think, barring the noise cutout, nobody knows when the war will end, what will happen. But the macro setup is not as bad as it was pre-COVID. And we know what happened after COVID from the market perspective. So we are in a much better setup as far India is concerned. And our tolerance level to oil has also gone up to about $90, in my view. And the export of services, which used to be $80 billion pre-COVID, 2019, as we stand, it's $240 billion. So I think the overall absorption and the shock absorbing capacity for macro India is much, much better than in the last 10 years. And I believe that once this settles down, we will see very strong corporate earnings growth in many sectors coming along.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come. Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Good evening. Welcome to The Big Question. I'm Vikram Oza here on NDTV Profit tonight. We're examining a new and potentially a very dangerous front when it comes to modern warfare. For decades, wars have been fought over territory, over oil, over shipping lanes and strategic choke points. But what we're now witnessing in West Asia is suggesting that the battlefield is expanding into something that is far more modern, far more global as well. The digital infrastructure that powers the world's economy. Now, Amazon, for one, has confirmed that its Amazon Web Services, AWS, that cloud region of AWS in Bahrain, has been disrupted. This has been reported. The drone activity that took place has been linked to the ongoing Israel-Iran conflict, and which is why we are seeing this report. This is the second such disruption in just under a month. Earlier this month, of course, Iranian drone strikes hit multiple AWS facilities in the UAE as well as in Bahrain. It marked the first known instance of a major global cloud provider's data centers getting directly targeted in an active war. So those attacks have triggered fires. They've had these power outages, structural damage, disrupting cloud services that are used by banks, by healthcare providers, by telecom companies, businesses across the region, all of them getting affected. And AWS has warned that customers now will have to spend time in where recovery is concerned. It's going to be prolonged, and they've advised large-scale migration to other regions. So these are not just commercial facilities. What we're talking about, these are data centers, which are the backbone of cloud computing and financial transactions, government services. Everyday digital life is what we're talking about here. So yes, the implications can be quite wide. It doesn't stop there at all. In fact, when you're talking about cyber warfare, it is escalating in parallel. Earlier this month, US medical technology giant Stryker suffered a massive cyber attack, and it claimed this by an Iran-linked hacking group, that systems have been wiped, data was stolen, global operations were disrupted. It highlights how digital attacks can actually cripple real-world supply chains. It can happen overnight. So the damage can be quite deep. Now, there are warnings that the next and perhaps far more destabilizing target could be the undersea internet cables. And we'll just pull that up in a map. There you are seeing it in front of you. You're seeing exactly how this can play out. What you're seeing are those lines, those cable lines. They run across the world. You're talking about a Red Sea region, you're talking about the Persian Gulf, and all of that. And perhaps if we can zoom in a little further, you'll see exactly where the trouble point is, where this war is concerned. There you have it. Bahrain is the area that we are talking about. Qatar is the other. You're seeing how close we are to those lines going all the way across, and they go all the way to India as well. It kind of pulls in. See, that's the kind of connection that we are talking about. The world is a very connected place, and it's quite obvious. So any damage anywhere, right now we're talking about that war region where it can actually be attacked, and the repercussions are going to be felt all across the world. Those cable lines cut through all kinds of geographies, all continents, all sea lines. So this is going to be far more destabilizing, targeting undersea internet cables, and that's exactly what we are seeing the possibility of. Nearly 95% of internet traffic in the Middle East, it travels through fiber optic cables that run beneath the Red Sea and the Persian Gulf. That's the kind of concentration we're talking about. Key global cable systems, they pass through the Strait of Hormuz. The choke point that we're talking about, the Strait of Hormuz, is again crucial when you're talking about the cable, the optic fiber cable lines, and many of that is in shallow waters, which makes them dangerously vulnerable. So these cables connect Asia, Africa, Europe, and they carry everything. Financial trades, cloud data, video calls, military communications, all of that carried through those lines. We've already seen how fragile this system is. In recent years, if you remember, damaged cables in the Red Sea and just off Yemen, that caused significant damage. It caused internet slowdowns, disruptions across India, the Gulf, parts of Africa even. And at the same time, the Middle East has become this major global data hub. Saudi Arabia and the United Arab Emirates, they are hosting billions of dollars of investments from Amazon, Microsoft, Google, Oracle, OpenAI. So if conflict spills over into this kind of digital infrastructure, the consequences will not remain regional. So tonight, the big question is not just about missiles and drones or even about a temporary pause in attacks on power infrastructure. It is about whether modern warfare is now entering a new phase where data centers and cloud servers, cyber systems, undersea cables, all of these become legitimate targets with the power to disrupt the global internet and the global economy. So now that we are seeing this happen, war has already kind of spilled over as far as the West Asia war is concerned. We're talking about the impact it's had on oil supplies. We're talking about shipping routes now getting choked. But now this is going far beyond. We're talking about disruptions and internet outages, the repercussions of which are going to be felt across the world. How potent is that in a war of this kind? Which is why the big question is internet the new target? And we've got a potent panel to take this on as well. Let me introduce you to them. Let's bring in our panel. At this time, we have Captain Alok Bansal, Executive Vice President of the India Foundation and former Executive Director of the National Maritime Foundation. Dr. Shubhda Chaudhary is with us, Middle East expert, founder of the Middle East Insights platform. Pankaj Desai also with us. He's co-founder and Chief Executive Officer of SecureTech, and they specialize in cybersecurity and digital risk. Also, Subimal Bhattacharjee is author and technology policy advisor. It's great that you could join us, and we'll have additions as we go along. But yes, at this time, Shubhda Chaudhary, from a West Asia lens, is this about military advantage, or is it also about sending a message that economies and daily life can be disrupted? It can happen at will.
Yes, first of all, thank you for inviting me. Now, internet has always been the soft underbelly of global economy. Now, why Red Sea is important? Red Sea is important because it carries 17% of global data, which includes 90% of Europe, Asia to East Asia communications. Now, the Houthis, which were born in 90s, can immediately plunge in through the Bab al-Mandab Strait, and they have done it twice before. In February 2024, in September 2025, when they did cut the internet cables. In February 2024, they cut the anchor of the UK-owned Rubimar ship, which, along with cutting the cables, had an impact on the fertilizer and oil spill that took place and the impact on the desalination plants at Jeddah. The second thing happened in September 2025. Now, NetBlocks, which is the neutral internet authority, which talks about internet disruption, did state that in 2025, both East Asia and South Asia were impacted. It is also the age of AI, cloud services, 5G, data centers, and UAE and Saudi Arabia, especially being the hubs for startup nations and having their visions for 2030 or 2035 respectively, have taken a strong hit. But the point over here is that right now, what is the other way? What is the solution for it? The solution is, as we speak right now, there are 60 cable ships which are for repair for internet cables all around the world. For Red Sea, there are only two cable ships. One is the Emirati, which is CS Niva, and the second is French, which is Orange Marine. But the insurance cost of the repairing of these ships is more than $1 lakh per day. And repairing an undersea submarine cable.
So you're saying that damage can be very, very deep. And to get recovery and to get repair work done is going to be a huge task. Captain Alok Bansal, when you see drones hitting data centers instead of military bases, what does that tell you? Are we clearly seeing a new kind of battlefield that is emerging?
See, we need to understand that this is an asymmetric battle, and Iran and its proxies want to hit out at the offenders in any way. And they know they can't beat them militarily. So they are obviously targeting the soft underbelly. So they are attacking the business centers, they are attacking the data centers, because they know that would hurt these countries, especially the US-based companies, because many of the US big tech companies are based in these regions and they're dependent on internet cables which are running through the undersea. And these can easily be disrupted by Iran as well as its proxies. For Houthis, it's very easy. Bab al-Mandab is actually, if you look at it, is narrower than even Strait of Hormuz.
Yes.
So that gives them a greater leverage. And now they know, because their purpose is only to hurt the US and its allies in whichever way they can. And they obviously cannot match them militarily. So they are obviously targeting the soft underbelly. That's where the companies are being hit. That is where the real estate buildings are being hit. That's where you are seeing the data centers are being hit. And that's what is their aim.
So soft underbelly is a reference to the easy targets that the internet provides to a war situation. The kind that is unfolding right now is a certain kind of space that tells us what could go very wrong. Pankit Desai, after those drone strikes disrupted the cloud infrastructure in the Middle East, and we've seen how drones are being used in modern warfare, how vulnerable are these global data centers to physical attacks, to cyber attacks in a war situation, even otherwise? How bad can the damage actually get?
Let me just take a step back of what has happened globally in terms of these data centers. So originally, the way the data centers were imagined, you were supposed to have it centralized in a few places and the world would use it. Increasingly, data localization and residency rules started coming in, insisting that footprints had to be created in respective geographies. Now, what was required by law in terms of localized data centers to hold sovereignty over data is now coming back to bite, because you now have an infrastructure that someone can go after. So one was the regulation side of it, but other is now the downside impact that you already have this physical infrastructure that is created in these countries that is now becoming a legitimate target. Now, the problem with this is that in case of a data center, it is not just the building that you can kind of look at going after. You have the cooling systems, you have the electricity systems, you have the fire management systems. You could touch any of them and the data center would go down, right? So, and the recovery from there is a fairly long process. You also have an ancillary problem that when you hit a data center, it will most likely going to impact the localized economy. So the collateral damage is not just military, but the collateral damage is also the local ecosystem, the businesses that depend on it.
Correct.
Which can mean a trust issue sitting on.
Absolutely.
And last but not the least is that the same technology that powers a lot of these attacks, they need a physical data center. Now, if you were to hit them, now granted, some of them will not be residing in an open source cloud data center, but you will have to put that data somewhere. So if I hit that, you also have a problem of carrying out an attack. So that's the place that we find ourselves in.
So Vimal Bhattacharya, most of us assume that the internet is a resilient kind of entity, but how dependent are the banks, the stock markets, the airlines, like Pankit is talking about, the governments, the digital payments? We are dependent on a few cloud providers. I want to help our viewers understand what we are up against.
I think we are at one of the points in time where we are seeing the full-fledged impact on critical infrastructures as well as the whole cyber infrastructure. And for the first time, it is very clear that these targets are definitely very well thought out. And this is not the first time, this is the beginning. And with every conflict, we would see not only the cyber element, but also the attack on critical infrastructures. And this is more worrisome because globally, first and foremost, there is no agreement around, critical infrastructure protection or how do we deal with it. The UN effort 3 years back were just, 13 non-binding norms that doesn't give any comfort about how do we deal with, say, an outage happens or, when the disruptions happen. But to coming back to your point about all of the systems that today are critically dependent upon the infrastructure of the internet, and of course the various applications and systems that run on it. You mentioned about banking, the telecom, the power sector. All of them are very much today dependent upon
no doubt about it. So, Captain Bansal, if you were to assess India's standpoint, a lot of our internet traffic to Europe passes through this particular region. If you're talking about the implications from attacks in the Middle East, how exposed are we if things spiral?
See, we are exposed, and any attack in this particular part affects us. As you know, the Gulf and the Middle East, the internet disruption as well as data centers being attacked will affect our businesses. More significantly, attack in Gulf-based data centers will unravel the economics of these big companies, and many of the workers who are working there are Indians. And as you know, almost $55 billion we get as remittances every year from this region. So any downturn as far as economic activity in this region is concerned will have a direct impact on us, besides, of course, energy and other security, which we are looking at otherwise. I'm talking of this indirect impact through attacks on data centers, internet, and business establishments that would have an impact on us. So India is definitely concerned, and that's why our government has been in touch with the Gulf countries and trying to talk to them, and also talking to Iran and trying to mediate and trying to reduce the damage to these non-military targets.
Yes, but when we look at the strategy over here, Dr. Shubhda Chaudhary, perhaps you can weigh in. Are we looking at a deliberate hybrid strategy where this war is concerned? Missiles, drones, then cyber attacks and economic disruption, they're all rolled into one. Is this part of a strategy that perhaps tells us about things to come in the future as well? Because we're not talking about war in West Asia alone. We're talking about wars that are happening all over and perhaps could in the future, unfortunately.
Yes, of course it is part of the strategy because, for example, if you compare, Israel uses a mosaic doctrine in which it needs every data, every footprint, everything assembled into a mosaic to actually target any particular person, entity or institution. What Iran does, on the contrary, and the proxies, which are Houthis and the PMF in Iraq, they follow the decentralized mosaic doctrine in which all of the units, be it the 31 provinces in Iran or the Houthis or the Hezbollah, are autonomous. They are not in sync with each other.
Correct.
They have their own leaders and they're working currently. Now the point is that what impact will it have on India? Look, in UAE, we have 35 lakh Indians. In Saudi Arabia, we have 25 lakh Indians. And then in other Gulf countries. The point is right now, it will lead to disruption for internet service providers like Bharti, Airtel, Jio, Tata Communications. They will be forced to reroute through the Cape of Good Hope, which will be costing more. That is the first thing. The second thing is the cloud platforms, be it Amazon Web Service, be it Microsoft Azure or Google Cloud, out of which Microsoft Azure has already signaled that they are going to force majeure. Then it is going to impact the IT and BPO sector in India. There will be delays in financial transactions and fintech. There will be ripple effect on online shopping, logistic tracking, digital payments, the higher cost of the internet service providers. And India, because of these unfortunate developments, India has already delayed the Blue Raman and the Indian Europe Express, along with the working on the IMEC project that was there.
Yes.
So these are going to have many ripple effects.
Could these cyber attacks start happening alongside the physical strikes on the data centers and cables? And Pankaj Desai, if these financial systems or the power grids are hit together, how much more serious does that get?
Extremely serious, right? So you need each attack, post-attack, you need to have a recovery capability or recovery time. Now, when you are hitting multiple areas together, that creates a cascading effect that is very difficult for someone to remediate for. So think about it. You hit a data center and you hit a telecom ecosystem along with it. Let's say you hit transportation ecosystem along with it. Now, when I'm trying to go and come back up, without a good telecom network, even if I was to get the data center systems up and running, and let's say the cables are cut, there is no way that I can get the communication up and running. Same thing for me to now today service impacted, a war zone impacted area. I need to deploy feet on the ground. How do I get feet on the ground when there is an activity that is an active war region that is playing around with me? So the problem that we have is in a hybrid war that we are seeing right now, in a United Nations war, it's much easier, right? When you were just fighting with tanks and aircrafts, life was relatively straightforward because your economic life could continue as it is. In a hybrid warfare, you are facing the military challenge in terms of the attacks happening on the military installations, but you're also impacting the civil society, which creates a chaos which is becoming very difficult for someone to come out of. Look at how the whole Middle East region, from an economic perspective, with the real estate prices crashing and the gold and other impacts that are sitting out there, you are finding day-to-day life getting hit very hard, making it very difficult for someone to come out of this rut.
It is going to be a long time to be able to come out of the rut, but this is a new reality. And perhaps you're talking about the economic downturn that this can cause globally. We're not talking about a war region that is specific, and now the repercussions are being felt all over. In terms of our ability to be able to ward off the impact of this kind of attack, this kind of warfare, Alok Bansal, Captain, how do you see this actually play out in the preparedness of countries that perhaps do not even are remotely connected with wars that are taking place, like India?
See, India always knew that any disruption or any turbulence in Persian Gulf will affect us. We had actually looked at the threats which Iran had been posing and had been claiming that if in case of any turbulence, it will close the Persian Gulf. And we knew the indirect impact of that, what will be on the Gulf countries and consequent impact on us as far as both remittances are concerned, movement of personnel are concerned, as well as our energy security. Probably we had not looked at the crisis from the internet point of view, that undersea cables could be cut or the data centers could be struck. That probably we may not have visualized. But I'm sure the government of India is looking at these factors. And I think that's one of the reasons why government of India is extremely concerned with this ongoing conflict. And we want resolution of this conflict as soon as is feasible.
Yeah, but is there any international red line over here? Dr. Shubhda Chaudhary, is there any global red line that is acceptable, or are we entering this phase where anything digital is considered fair game in a war situation?
So there were legal aspects that were created right from the very beginning when the internet cables were laid out. The first one was 1884, which is Paris Convention about it is a punishable offense when there is any damage to submarine cables. The second was 1958 Geneva Convention, where the countries have the right to lay them. And the third was the 1982 UN Convention of Law of the Sea, which clarified that how the states can regulate the internet flow through the submarine cables. But the point here is that how can Houthis actually do it? What is the way they can actually do it? The first is they can use anti-ship missiles, drones and speedboats. Any repair ship that has to go to even repair needs port permit from the Houthis if they are going through the Bab el-Mandab Strait. Second is they are creating a high-risk environment just as the Strait of Hormuz is not closed, it's not open. The insurance companies are not ready to insure the ships. That same kind of narrative will take place with the
But just to
internet.
interject, does it make it more difficult when you have a proxy war situation? Is it more difficult to apply any kind of international red line?
The international red lines have become very obsolete over the period of time, especially while taking about the various kinds of invasions and the various kinds of battlegrounds that have evolved over the past many decades in West Asia or in South Asia.
Yeah.
So international law is it is a paralyzed institution, and there's no legal, methodological binding authority that it has.
So then, Subhimal Bhattacharjee, is this like what we are seeing right now? Is this something that is going to be temporary? Are we going to be able to tide over this? Is it a temporary phase of escalation that could happen? Or is it the beginning of a world where the internet itself becomes a permanent battlefield?
No, I think it is the latter. Right? This is the first sparks, and this is going to continue in all future conflicts. You would see that the elements of cyber and attacks on critical infrastructures actually becoming concomitant with the physical and the kinetic attacks. And more importantly, there would be many attempts to see that, you take off the networks down. So disruption and debilitation would be something that would form a part of a larger strategy. And that is where the asymmetric possibilities in the battlefield today get far much more ground. And the global community has not been able to come to an understanding about how do you do such issues. And on top of it, when you see that, responsible nations who should be themselves laying the way forward, they themselves are nowhere near in a position to be able to get this going. So I think, that it's very crucial to see that whatever form of understanding about protecting critical infrastructures is undertaking on a war footing basis, so that the infrastructure, whether it is underground cables, whether undersea cables, whether it is the servers around, they are not disrupted.
Pankit Desai, from a cybersecurity and national security standpoint, if I can get a quick take from you, because we're running out of time, what do you think countries like India should be doing right now, and urgently at that, to be able to protect critical digital infrastructure?
So we have a body called as NCIIPC, which regulates the critical infrastructure, which has banks, telecom, airports, highways. At the very least, we should look at all the data centers that are operating critical infrastructure components of the country to be covered under that. Right now, it kind of comes like a roundabout way. So if let's say a large bank is getting covered under NCIIPC, and if you are hosted somewhere else, then you get covered. But I think looking at what's just happening here, and the fact that increasingly workloads for us in India are moving to cloud, it is absolutely essential that we get that under the ambit of NCIIPC, which starts creating a set of frameworks that allow us to make sure that we have redundancies, capabilities of recovery, as well as an understanding of what a business continuity plan looks like if something was to get hit.
All right, well, tonight's discussion is making very clear at least one point, that war is no longer confined to borders and battlefields or even power plants. It is moving into the invisible systems that keep economies running. We're talking cloud servers, data centers, cables under the sea, and networks that we all depend on every single day of our lives. And what we are seeing in West Asia, that may well be a warning of what future conflicts are going to look like, where disrupting data can be as powerful as destroying territory, and where the internet itself becomes a strategic target. Now the question is not whether this can happen again or not, but whether governments and companies and societies, whether we are all going to come together and we are going to be prepared for it. I want to thank my panelists for joining us with their insights, Captain Alok Bansal, Dr. Shubhda Chaudhary, Pankit Desai, and Subhimal Bhattacharjee. Thank you very much for joining us on The Big Question. Of course, for viewers at home, it is quite obvious that wars are not being fought at battlefronts. Now it's coming home, where data is getting targeted and internet outages are real, and they can happen and disrupt our day-to-day lives, even if a war is happening at a distance. It's time for us to wrap up this edition of The Big Question. Thanks indeed for joining us. The news continues. Do stay with us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come. Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Hello and welcome to NDTV Profit. We have breaking news. We have news that the American envoy to India, Sergio Gore, the American ambassador to India, he has put out on social media this conversation that has taken place between Prime Minister Modi and US President Donald Trump. Sergio Gore has posted on X that President Donald Trump has spoken with Prime Minister Modi and that they have discussed the ongoing situation in the Middle East, the war that is taking place in West Asia. And that includes the importance of keeping the Strait of Hormuz open, which is India's key concern. So this conversation has taken place. Vishal Vivek, my colleague, is joining us from Delhi to be able to tell us exactly what he's picked up from that tweet that has been put out on X by Sergio Gore. Vishal, do bring us up to speed with what we know already about Sergio Gore and what he said about the conversation between Prime Minister Modi and Donald Trump.
The whole situation around West Asia seems to be revolving around Strait of Hormuz, and that is what the ambassador from the US to India has spoken about, that the call that happened, the historic call that happened just moments ago between Donald Trump and Prime Minister Modi seemed to be revolving around that, and they spoke on the importance of keeping the Strait of Hormuz open. It's a very brief statement. It just has one sentence in it, and they say that they have discussed the West Asia situation and also the fact that that crucial choke point that's responsible for almost 20% of the whole world's global supply of oil that needs to be kept open. That is what they have spoken about, and as I mentioned, the whole situation seems to be revolving around that point. And Iran has been using that as a leverage ever since the war started, and it's quite relentlessly attacking vessels that are trying to cross the Strait of Hormuz. But Iran has made some concessions, and why is that? Because India has been able to establish this communication with both the sides. India has been speaking with the US side, with the Iran side, with Israelis. So the foreign policy that India has had over the years, over the decades, seems to be at display at the moment, and India is one of the few countries that seems to be reaping dividends of that foreign policy, because only a handful of countries have been able to pass their vessels through the Strait of Hormuz in the last few days.
Vishal, like you pointed out, that India's entire drive while the Middle East war plays out is to ensure that our energy supplies remain intact. And the Prime Minister has spoken earlier today in the Rajya Sabha as well. But in terms of the entire push coming through, the diplomatic lines, and like you said, the Indians have been speaking to the Israelis, the Iranians, and now the Americans as well. In terms of this entire push and what India has been able to garner so far by way of ensuring that oil and gas supplies don't get disrupted, how much progress has India made?
So it's a vessel by vessel kind of a deal that if you go back about 3-4 days ago to what the Foreign Minister of India, S. Jaishankar, said, he clearly mentioned that it's a vessel by vessel deal. There's no all encompassing pervading deal that covers almost all the vessels. But we'll have to go vessel by vessel. There are at least 20 odd Indian vessels still stuck on the western side of Strait of Hormuz that still need to be they need to clear the Strait of Hormuz, and we have heard that 2 vessels are already on their way to Delhi, on their way to India, which have been escorted by the Indian Navy. So there needs to be at least 18 more instances of something similar happening, and that would require coordination at the highest levels of diplomacy. So all of that is happening in the background. Of course, at least 400 to 500 Indian seafarers are also stuck near the Strait of Hormuz. So to take them out from this situation, this really tough situation, is also one of the things that the Prime Minister Modi has talked about. So all of these things would have been talked about in these calls. So we'll have to see how this unfolds. Still about 20 odd ships that need to be freed from that choke point.
Vishal, Vivek, thanks very much for bringing us up to speed with the latest developments, that conversation taking place between Prime Minister Modi and President Donald Trump. Let's put that in context. Dr. Shubhda Chaudhary is joining us with her expertise. She's a Middle East expert and the founder of Middle East Insights platform. Dr. Chaudhary, glad you could join us on NDTV Profit. How much significance are you associating now that India and the Prime Minister has had a word with President Donald Trump within the ongoing war situation and India's energy supplies? That is the entire reason why India has been speaking to the Israeli side and to the Iranian side. How crucial is it to have spoken to President Donald Trump at this time?
Thank you for inviting me. I want to just point out to the timing, because yesterday it was mentioned that Pakistani Field Marshal Asim Munir is going to be the mediator for a ceasefire being between US and Israel on one hand, and on the other hand, Iran. And there were talks that, Steve Witkoff and Jared Kushner are in Islamabad. But the point here is then Trump's call today. Right now it is 9 o'clock in the morning in Washington, D.C. And his call to Prime Minister Modi, which is being actually relayed by the American ambassador to India, Sergio Gore, has very interesting dynamics. The first is we have 600 plus seafarers which are struck at the west of Strait of Hormuz. Plus we have 23,000 Indian seafarers who are working for foreign vessels who are also stuck. Second is also that Trump is trying to leverage, because he has cooled down the market till the end of the week by giving the 5-day leverage. But after the 5th day, will the US Marines and paratroopers be deployed at the Kharg Island? We don't know. The third thing is he calling Prime Minister Modi because he wants a scapegoat for plausible deniability, and because most of the NATO countries and the other oil importing countries are not in this platform with Trump and he finds himself alone? Trump has always been pressurizing since 28th of February that countries that are very dependent on oil and LPG, like India, South Korea, China, should take the entire onus of opening up the Strait of Hormuz. So is he also going to talk about India's Navy deployment as an escort for the American tankers? So right now, this is just an example of the transactional, erratic, and ambiguous foreign policy that Trump has, which is having fractures within its own cabinet, because there are chances that J.D. Vance or Tulsi Gabbard may resign. There is a fracture between Pete Hegseth and General Kane. There's a fracture between Marco Rubio plus J.D. Vance. So And yesterday itself, Trump was mudslinging over Pete Hegseth, the Defense Secretary of War.
So whether it is an economic challenge or a political challenge, Dr. Shubhda Chaudhary, that Donald Trump faces, can India help Donald Trump in exiting this war?
So because Donald Trump is quite transactional, then Indian foreign policy should also be functional in a way that this transaction is understood. Is it political and economic? I think it is all. And why he keeps on saying that we do not import oil, though the case of Venezuela has been easily forgotten. But the point is that the US shale oil that the Americans use, from 2014 till 2020, all the companies that were investing in the American shale oil have gone bankrupt. That's the first point. The second point is the common Americans will buy the shale oil at the same rate as they buy the Brent crude oil, which is refined. So it is a regressive tax for the Americans who are already reeling with the illegal tariffs which were in place. Now, India has a functional diplomacy with Iran, with the Gulf states, and with Israel. So on what level is any kind of mediation actually taking place between US and Iran? We don't know. Yesterday, Iran was talking about that Trump was talking about that who is going to open the Strait of Hormuz. He said me and the Ayatollah, or whoever the Ayatollah will be. So he has very cursory understanding of the IRGC.
Yes.
And he has a very cursory understanding because there's something else. Iran has its own air force, its own navy, its own police force.
Yes.
But IRGC is a paramilitary wing which has its own air force, its own navy, its own police force.
But like you've correctly pointed out, Dr. Shubhda Chaudhary, all said and done, at this time, a conversation taking place between President Donald Trump and Prime Minister Modi is crucial. At one level, India wants to ensure that its energy supplies remain intact in case this war prolongs. But as far as President Trump is concerned, like media reports suggesting, he's looking for an exit for all the kind of economic and political pressure he faces back home. Can India support him in that exit is the big question as well. The impact of that conversation is going to be very closely monitored, but I'm afraid we'll have to leave it there. We are closely monitoring the situation. Dr. Shubhda Chaudhary, Middle East expert, thank you very much for your time and your insights. With that, we'll wrap it up on this piece of breaking news. But of course, all the news, all the updates right here on NDTV Profit. I'm Vikram Oza. Thanks for joining us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner.
Good evening, you're watching Market Express with me, Shriyanti Singh, and this is the show that gets you up to speed when it comes to headlines, but also the stocks that were buzzing away in trade. But before we do that, a very quick look at the markets. Relief is finally rippling through when you talk about the Wall Street after days of pressure. In fact, you're looking at the Nifty finally reclaiming the 22,900 mark. Sensex as well, you're looking at a surge of over 1,500 points. And a broad-based rebound is what you were looking at in today's trading session. When you talk about cues, largely bargain hunting, easing global cues as well when it comes to Middle East tensions. After Trump's commentary and short covering combined to spark today's rally, offering investors a much-needed breather from some of the recent volatility that you've seen. And all sectors end the day in the green with Nifty, media and auto leading the gains. You do have Nifty Bank and Financial Services also adding strong follow-through. Let's also talk to you about some important commentary then. In a parliament address, you do have PM Modi, who said that India is in constant communication with the United States, Iran and Israel, urging all sides to work toward immediate de-escalation amid the ongoing Middle East conflict. He's also noted that several ships right now remain stuck near the Strait of Hormuz
and the government is closely monitoring their status while also coordinating with regional authorities to ensure safe movement through the Strait of Hormuz. Let's go across and listen in.
क्रू मेंबर्स हैं। हॉर्मुज़ स्ट्रेट में दुनिया के अनेक जहाज फंसे हैं, उनमें बहुत बड़ी संख्या में भारतीय क्रू मेंबर्स हैं। ये भी भारत के लिए एक बड़ी चिंता का विषय है। युद्ध की शुरुआत के बाद से मैंने पश्चिम एशिया के ज्यादातर देशों के राष्ट्राध्यक्षों के साथ 2 राउंड फोन पर बात की है। हम गल्फ के सभी देशों के साथ लगातार संपर्क में हैं। हम ईरान, इजराइल और अमेरिका के साथ भी संपर्क में हैं। हमने डी एस्केलेशन और हॉर्मुज़ स्ट्रेट खोले जाने पर भी उनसे बात की है।
Alright, so there you go. That's key commentary coming in from the Prime Minister as well. But as the war in the Middle East enters its 25th day, you do have Iranian media that has reported that Israel-US strikes targeted 2 gas facilities and a pipeline. Only a day after Trump also stepped back from his threat to attack power infrastructure. Trump, in fact, yesterday had announced a 5-day pause on targeting Iran's power plants. However, Tehran denied any official talks. Officials, in fact, said that 6 people were injured after an Iranian missile hit Israel's commercial hub Tel Aviv as well. And you do have police in the city that are saying that they're handling several impact sites of munitions. Israel's military has also said in a post on X or Twitter formerly that its fighter jets had carried out a large wave of strikes in central Tehran yesterday, targeting key command centers, and that also includes facilities associated with the Islamic Revolutionary Guard Corps or IRGC as well. That's the intelligence arm that you're talking about, the Iranian Intelligence Ministry as well. Let's also move on, and according to an official statement, the Israel Defense Forces said that it carried out overnight operations against what it described as Hezbollah-linked sites in different parts of Lebanon as well. And the IDF, in fact, has said that the activity targeted locations it believes are connected to groups operating against Israel, and added also that its actions were aimed at removing threats and also protecting civilians. The statement also reiterates Israel's long-standing accusation that the group operates from civilian areas in the country, something that Beirut-based organizations have previously denied vehemently. Let's also move on, and in progress on the Indian front as well, you do have 2 Indian LPG carriers, Jagbasant and Pine Gas, carrying over 92,000 million tons of LPG that have transited through the Strait of Hormuz. The vessels have 33 and 27 Indian seafarers on board respectively. These vessels are destined for India and are likely to reach ports between 26th and 28th March 2026. Let's also move on and get to some other updates as well. Saudi Arabia and the UAE have taken steps that signal closer alignment against Iran in the ongoing conflict. In fact, according to reports, you do have Saudi Arabia that has agreed to grant the US military access to King Fahd Air Base as well. And this is something that marks a reversal from its earlier position against using bases for strikes on Tehran. The UAE has closed an Iranian-owned hospital and club. These actions come after Iranian retaliatory strikes when it comes to energy assets across the region, in fact. And when you talk about the moves, they raise concerns over further escalation and potential impact when it comes to oil supplies. Let's also move on and talk to you about web services that has reported disruption to its Bahrain region as well. And that's Amazon Web Services that you're talking about. You're looking at drone activity amid the ongoing US-Israel-Iran conflict. This marks the second such incident since the war also began. The drone strike caused structural damage, power disruption, and also water damage from fire suppression efforts. AWS, in fact, is actively migrating affected customers' workloads as well to other regions, with a large part already shifted. And the companies confirmed that the impact largely stems from reported drone strikes